European markets are looking back to the positivity of Friday on Wall Street, along with Asia up by 1.3% on the MSCI Asia Pacific. We've got the 10-year yield in there at 3.8%. Is that high, given recent experience, or is it not high? Iron ore futures down by 1.6%. China in focus then, Tom, and apparently a nervousness around the property sector there having an impact on iron ore prices.
Yep, we have a new head of the PBOC, the party secretary, Pan Gongshang, and what he is going to be doing. Is it continuity, or will there be radical moves coming through from the PBOC? As the futures, we look back briefly at what happened in the first half. Of course, the gains of around 10+% on European stocks. The DAX futures now pointing to gains of about 26 points in today's session, Monday's session. The FTSE 100, though, lower just by a smidge. CAC 40 over in France pointed to gains of 0.2%. PMI data out of a number of major European economies later this hour.
Yes, PMI data is due from a number of major economies. We're waiting for that. We appear to have the Japanese CPI chart, which was very interesting. Mark was talking us through that a little while ago. That's not what I'm looking for right now. I'm looking for the start of the European equity session, because as Tom has been pointing to, we've seen modest expectations, but positive expectations for where we go at the start of the European trading day. The PCE numbers on Friday out of the United States, kind of comforting the markets that perhaps the inflation fight is proving lucrative. It's a Monday, I think I can tell. Things are a little slower to start this morning. But essentially, we're looking for any evidence that European stocks go higher this morning after the US session. But US futures, and remember that we are going to have a shortened trading day in the US today and no trading tomorrow, because it is that little thing called July 4th and Independence Day. Because of all of that, we could see a muted sort of market dynamic this week. We could see lower volumes, etc. So anyway, we will get to the start of the European trading day. I can see, in fact, that Tom Mackenzie has the start of the European trading day.
The gremlins are in the system this Monday morning, Anna. But here's what's coming through for the FTSE 100 then. Very modest gains. You're back above that 7,535 level. Over in Germany, the DAX, and again, we're getting manufacturing PMI out of Germany this hour, along with France, Italy and Spain. The DAX then posting gains. The CAC 40 looking to push above 7,400. You have the domestic politics, of course, the unrest that's been rippling across that country. It seems to have come down a little bit over the weekend, so that's good news on the ground for France. The CAC 40 probably not linked too much to the domestic politics there, gaining 0.2%. And across your sectors, so there's the China component coming through as well in terms of the Taixing services data, or PMI data, I should say, again, pointing to the weakness in China's manufacturers, particularly the smaller independent companies. And you've seen that read across in terms of iron ore in the session today. Despite that, basic resources as a sector is gaining. The technology sector, we've been focused on Tesla. That links to both technology, of course, and autos. And the run-through it's come through in terms of the production, in terms of the demand for the first half or first quarter, most recent quarter, I should say, much stronger than the expectations, coming through with about 500,000 in terms of sales for Tesla. But Apple as well, a question mark there about supply chains and being able to produce that Vision Plus Apple product as well, the headset, and a challenge there for Apple. Technology as a sector is getting 0.5 here in Europe. I'm looking across basic resources again, a gain of 1%. Energy is also up 0.8%. The sectors that are pointing lower in the session so far today, you're looking just at a drop of about 0.2% in retail. Construction, food, travel and leisure, all essentially flat. On the upside, worth flagging, autos up 0.4% as well. So that's how things are kind of breaking down on a sector-by-sector basis, Anna, this Monday morning.
Excellent. So that's what the markets look like. Modest gains and some interesting sector moves. Let's get to Sam Unstead from the Markets Today blog. Sam, really interesting to see basic resources go higher, despite the fact that iron ore prices have been falling, and perhaps we'd anticipated maybe a little bit of downside move there.
Yeah, I would certainly have anticipated some downside move, but I think what you just said, this is going to be quite a muted session likely. You got July the 4th coming up. Also, we're entering the summer. I know that sounds a bit simplistic, but it's true that trading does slow down. And until we hit earnings season, we're in that lull just before that happens. It seems like.
That's it. Sam's called it. It's summer already. I feel like we didn't really have spring, but then summer here with a vengeance.
Well, we're like 40 days, 30 plus days of no rain in the UK. That should have been a headline in and of itself. I think it was at some point. What do you make, Sam, of the kind of the D-link then that we've written about? This thing been writing about the fact that equities appear to globally have decoupled from the growth story, and whether or not that is a theme that continues.
Yeah, I mean, that is the key question, really, into the second half of the year. The rally has just continued no matter what you're seeing. So, yeah, there are jitters occurring. We talked a moment ago about some profit warnings coming through for some quite key sectors, and yet the rally continues. So that is going to be a key question. I think also we have to think about, as I was saying, the data as it comes through, as we start to see that transmission of monetary policy, if that starts to really weigh on the economy, you see some really tangible impact of that in the data, you may see things.
That's interesting, because focusing in on the UK sort of expression of that, and we've got persistently higher than expected inflation in the UK, and we saw the Bank of England react at scale with that 50 basis point increase. And then on the heels of that, the UK's business confidence indicator down after that inflation shock. And I wonder if that's an important sort of early warning signal to be watching.
It could be. I would say, again, a lot of this is very mixed. Business confidence data is often very mixed. We actually had a report out on Friday that was saying that it was going higher. So, it's a little back and forth. But I think that's another part of the story. A lot of this data does look mixed. We had house prices last week, for example. There was some good elements, there were some bad elements. That's what you're seeing in all that data at the moment. It's when that starts to turn either good or bad, that's when we'll really see some reaction.
The numbers that came out on Friday out of the US in terms of the PCE, or personal consumption expenditure index, that was pointing in a very positive direction. And then consumer demand as well has softened in the US, which seems to suggest that the Fed is making some progress.
Yeah, it does, and I think that's what you're now starting to look for elsewhere. Still at the moment, consumers, in particular in the UK, very resilient. People are still going out, they're still buying things. Particularly, they're buying experiences. The travel industry is having a fantastic summer. When does that start?
You've got to imagine that's going to hit a hard wall at some point.
You've got to imagine it would.
Remortgaging.
Yeah, you would think so. I think you've got to remember with the travel industry, a lot of these things have been booked earlier in the year. A lot of these things also booked around sort of April time, when people started to get pay rises through. Those pay rises will not recur in the second half of the year, and obviously also people travel less during the autumn and winter season, so we shall see whether that...
Yeah, the remortgage conversation does seem to be something that sort of entered the pub lexicon, if I can put it that way, Sam. It's sort of a topic of conversation outside the Bloomberg universe, I'd suggest.
No question, yeah, and that is, I think, the key.
That's the transmission mechanism to watch,
exactly,
isn't it?
Exactly. When that really starts to flow through, and you've seen those mortgage deals go up, but it's only in the last couple of weeks, so not too many people will have remortgaged yet. But as we go through the next few months, I think you're going to start to see that really feed into the economy.
I think we just got a little window onto Anna's weekend there.
They did.
She was spending a bit of time in pubs.
There's a sense of panic showing yet.
It was a pub-friendly weekend, wasn't it? Sam, what are you looking for this week? The minutes from the FOMC, are they going to move the dial? The non-farm payrolls? What's top of docket for you?
I think that the payrolls, is the key number over the course of the week. It's actually pretty quiet, and again, we tend to focus mostly on the UK on the Markets Today blog. There is very little data. We have a lovely story on the terminal today about how folks are going to be buying up gilts during this lull in data.
So quiet.
Yeah, not until the 19th of July when we get inflation data, you get really market-moving stuff. So could be a pretty quiet couple of weeks.
That's the kind of peace and quiet we could do with in July. It's been a busy year so far. I can't believe we're in the first. Already the first half is done. Sam, thank you.
Sam Munstead from our Markets Today blog. Thank you very much indeed. You can get more, of course, from the team, from Sam and the team, on the front page of the Bloomberg UK website, or by typing in TLive Go on the terminal. Let's take a look now at a few of the other key things that markets are watching out for this week. We touched on a couple of them. Later today in the US, we're going to get the latest ISM manufacturing release, so how much softness is coming through for that sector and that part of the economy in the US. Markets are close, of course, will close early in the US today, of course, for Independence Day. That is, of course, a bank holiday for the US. Tomorrow, the RBA will deliver its latest decision, and economists pretty split on whether they go higher by 25 basis points. That's the view from Goldman Sachs, or stand pat. And it's a market holiday in the US, as I mentioned, for Independence Day. On Wednesday, minutes from the FOMC's meeting last month will be published. There's more PMI data on Thursday, the latest ISM services numbers due out, and we are set to get an update on German factory orders for May. On Friday, we're going to get an important update on the US labour market. Again, we just touched on that with Sam Munstead, the non-farm payrolls number. I think the print, you said, or at least the forecast...
225,000.
225,000.
Yeah. And it would be one of the smallest increases since the end of 2020. I mean, that sounds quite dovish, doesn't it? But still, we've been waiting for real cracks in the labour market. That's not real cracks.
It hasn't happened, despite all the damage that's going through the technology sector, the layoffs there, the finance sector, the banking sector. It hasn't come through yet. You've still got a sub 4% unemployment.
Yes, and that might come off a little. But we are looking for, before we get to the non-farm payrolls, we'll get a lot of clues on the job sector. We'll get the Challenger jobs report. We'll get the ADP private job creation, of course, and claims and jolts. So lots of data still to come on the jobs story over in the United States. Now let's get a check on the markets. On individual stock movers this morning, Joe Easton has a briefing. Joe?
Absolutely. So we're going to take a look at some of those stocks that we had in stocks to watch a moment ago. So Nokia, the one that's moving the right way for us this morning, up almost 3% in early trading in Helsinki. This as they announce a patent agreement with Apple. That's potentially going to boost their earnings from next year. Meanwhile, BAWAG, the short seller target, this is the Austrian retail banking company. That was up around 1% in early trading, given they've given some reassuring numbers on their profit outlook following that attack last week that sent the stock down as much as 14% on Friday. That one's rising a little bit over in Austria today. Meanwhile, the miners, they're not going the way we expected, as Sam was explaining there. Perhaps some broader market issues coming in, traders shrugging off that decline in iron ore pricing in Singapore overnight. We're also going to take a look at a couple of other stocks that have opened up. We saw Acciona Energía over in Spain. That's the worst performing stock on the Stock 600 today. They are falling around, it was down around 4%. It's now down 1.6% according to the screen here. That one getting hit in Madrid after JP Morgan downgrades their rating on the stock, advising clients to take some profits on those shares. Meanwhile, AstraZeneca, they said that a cancer drug, did meet primary endpoint. However, I've just read an analysis that said it didn't have enough data in it to reassure on safety concerns. This is a lung cancer drug, and that's shaving around 20 points off the FTSE 100 today, accounting for all of the underperformance in the FTSE 100 in terms of European stocks this morning. Meanwhile, finally, Generali, the Italian insurer, the Del Vecchio family over in Italy, the wealthy Italian family, is going to be allowed to increase their stake, buying up more shares, and that is boosting the Italian insurer today. That one's up 5%, the best performer over on the Italian market this morning.
Interesting. Thank you very much, Joe Easton, with a comprehensive look there at some of the early movers this Monday morning from the equities realm. Coming up on the programme, we will take a deep dive into the state of Europe's economies and break the latest Spanish manufacturing PMI data. That's coming up next. This is Bloomberg.
I don't think we can replicate Tesla. Tesla is a unique because when they founded, and then the personality behind it, the product is beautiful, technologically very, very strong. So in many areas, Tesla is Tesla, but XPeng is XPeng. We want to focus on what we think is important for our customers. Our customer like beautifully designed vehicles, either it's large SUV or sports sedan. We believe we have a very, very appealing family look that our customers is really attracted to. They like to have user-friendly features inside the cabin that has a technology feel. It's very smart. It enables them to really utilize the vehicle that's different.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority. Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 1 p.m. Eastern, right here on Bloomberg, your global business authority.
This is Markets Today, 14 minutes past 8 here in London, 14 minutes past 9 if you're in Paris or Berlin. European trading underway and up by 0.3% across European stocks. Let us get an update on what's been going on in France. Protests in France have continued on for a fifth night over the police killing of a teenager. Some 45,000 police were deployed in an effort to contain clashes that left hundreds of public buildings and shops damaged or ransacked. So that's clearly a focus for us in terms of the politics then, Tom, not necessarily seeing much market sort of read across from this story, but certainly worth keeping an eye on when it comes to Macron and his ability to control this story, really.
Well, it's been prolonged, hasn't it? It's been a number of days and a number of nights. It seems to have calmed down, as you say, over Sunday night.
Yeah, that was what Caroline was sort of guiding us towards.
Yeah. We're, of course, waiting for data as well in terms of the manufacturing PMI data, first and foremost from Spain, but also out from France, Germany and Italy. Interestingly, Germany is at the bottom of the pack in terms of the forecast. All are expected to be in contractionary territory. But again, Spanish June manufacturing PMI is out now, and it's fallen to 48. So actually marginally better than the surveys, but below the previous month, Anna. So for June, Spanish manufacturing PMI coming in at 48. The forecast had been for 47.9. So let's just call it in line with forecasts. But the previous month's 48.4, so it is a slight slowdown from the previous month. And again, it's in contractionary territory.
Yeah, in contraction, and it has been for much of the period since the second half of 2022. There was a period in positive territory in the spring, but most of that time has been in negative, in contraction, below 50. Raffaella Tonconi joins us, Chief Economist at Wood & Co, to give us her insights onto the European economy. Raffaella, we're building a picture then of the Eurozone economy today with these PMI prints, final readings as they are coming through from some of these economies, some of them are not final. But we've got the early clues, I suppose, in the Spanish number, which suggests we're still in contraction, at least over in Spain. What's your assessment right now of where the Eurozone economy stands?
Hi, good morning, everyone. I mean, the Eurozone economy is definitely slowing down. The manufacturing recovery that last year began to stutter at the end of June. And retail sales, of course, are in contraction territory in volume terms. So these two sectors are slowing down. Construction and services softening less so, but definitely there is a continuing deceleration. And you see this in pricing intention. So the slowdown in activity is being matched by a slowdown of inflation. It's not a dramatic picture, to be honest. It's a gentle slowdown and still one that is compatible with an overall expansion in 2024.
Talk to us, Raphael, about the kind of divergence between services and manufacturing. Is that going to continue to be a picture that plays out over the second half for Europe?
Probably in the second half, yes, I suspect, because services are very, very sticky, and they're the ones that have the biggest pressure in terms of demand or volume and also labor shortage, whereas manufacturing is probably reflecting more the slowdown in China and also the fact that it had soaring price ability last year, which is coming down very rapidly. But you know, both sectors and the economy as a whole is still signaling an expansion of employment. So we're really talking about a moderation, not a dramatic change of picture.
Okay. So a gentle slowdown, you suggest. And talk to us more, Raffaella, about your view on the labour market, because you point to a number of, I don't know, structural factors or fiscally driven factors, perhaps, around the green transition and defence spending that perhaps are offsetting more cyclical concerns in Europe in terms of job creation.
Yes, the labour market, especially in Europe, but to some extent this is also true in the US, is structurally under pressure. So in the EU, you have three long-term factors that are really biting now. You know, you have the aging of the population, which limits the supply of the productive cohort. You know, the 25 to 54 years old, those are a peak productive capacity. They're coming down relative to the previous business cycle. You have a structural rise of women in the labor force, which is great. You know, by all means, I'm very glad about it. But women tend to be also less flexible or can withdraw from the labor force more abruptly than men if there are family circumstances. And you have the structural push that favors those that have better educated, so those with degrees and up. So to give you a sense of magnitudes, you know, in the last year, Europe has added 2.7 million jobs. Of that, 2 million were tertiary educated workforce, and the majority of that was women. Okay, so that is the great structural factor. But then overlay the policy that Europe is advancing green energy, defense, of course, because of the war, transition, so that it's enabled by AI, but it still puts a lot of pressure on construction and services. It's advancing fast on nearshoring, so that puts pressure on manufacturing. And it could be that the reconstruction of Ukraine starts even before the war, because there are some member states that are considering releasing insurance even before the war starts. So that's an additional pressure. So what this boils down to me is that I think you're looking at the unemployment rate in the Eurozone falling 0.5% or even 1% in the coming 18 months.
Yeah, I mean, the ultra strong labour market in Europe that you see potentially in coming years. Raffaella, briefly on the UK, what is your sense of where inflation goes from here, and indeed whether the UK is facing the prospect of a sharp and deep recession?
So slowdown in inflation is happening also in the UK. It's very low relative to everybody else. So if in the Eurozone, you're likely to see inflation eventually getting below 4% by the end of 2024, in the UK, you're probably hoping that it goes below 5 or between 4 and 5, and that is it. The UK does suffer from labor shortages more than the Eurozone, and of course the trade barriers related to Brexit, which essentially complicates the picture. It will get a little bit more relief from real estate eventually as people remortgage. But essentially, it's still an economy that stagnates in terms of activity. But I don't think you will see a deep recession in the UK either.
Okay, so not a deep recession in the UK, gentle slowdown in the Eurozone. Raffaella, thank you. Thanks for joining us. Raffaella Tenconi, Chief Economist at Wood & Co. Coming up on the programme, reports that UBS boss Sergio Ermotti is wary of floating Credit Suisse's domestic unit. We'll talk about that. We'll have details next. This is Bloomberg.
The deal was the brainchild of Apollo CEO Mark Rowan. In In January, Apollo closed its $11 billion all-stock merger with Athene Holding. It had already owned 35% of the insurer. Here's what Apollo gets out of the deal. Assets under management. Apollo expects them to double to about $1 trillion by 2026. Much of that projected growth will come from the merger, and those assets are especially attractive to Apollo. Insurance companies typically go after much more modest returns than buyout investors. That will give Apollo more options for investing the cash. Athene is a steady provider of fee income. It has grown into one of the nation's biggest holders of fixed annuities, those retirement savings products favored by risk-averse customers. The merger will also allow Apollo to simplify its governance. It gave up its dual-class share structure and adopted a one-share, one-vote plan. The hope is that will eventually lead to Apollo's inclusion in the S&P 500.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Welcome back to Bloomberg Markets today. A Swiss newspaper has reported that UBS Group isn't planning an IPO for the domestic unit of Credit Suisse. Joining us now with the latest that Bloomberg understands on all of these the UBS stories, Tom Metcalf, who runs Bloomberg's UK and Middle East finance coverage. Very good to speak to you, Tom. So what are the options being considered then for the Swiss units?
Yeah, sort of as expected, we're hearing that UBS's base case, its preferred instance, is to keep this Swiss unit within itself, right? Like, other options are, of course, this IPO, perhaps even sort of hiving it off or selling it to someone else. But all the messaging from UBS is, part of the big reason, they're happy to do this merger is this very valuable Swiss unit, and ideally they'd like to keep it in-house, as it were.
What does that mean for the politics of Switzerland? What does it mean in terms of the government's reaction and the place of this entity within Switzerland?
Yeah, and I think that's the most interesting part about this. Obviously, this is what UBS wants, keep it within the group, but, there's a lot of stakeholders out here, a lot of powerful stakeholders, government, regulator, even the Swiss sort of popular opinion. So this is something UBS are trying to manage, and I think, what they'll say is, look, our preferred move will probably protect the most jobs, will be the sort of the best for competition, etc. But you'll have sort of lawmakers out there, perhaps rivals going, hey, no, it's much better if, hey, let's do an IPO or let's farm it out a bit.
Okay, so a lot of people who've got views. We've seen reporting elsewhere that UBS aims to say that Credit Suisse they're going to do the deal without using the government backstop. That seems to be widely understood anyway, I guess. But they did go to great lengths to get this government backstop, didn't they?
Yeah, exactly. It's one of the reasons they sort of felt comfortable putting through this deal. So it's about $10 billion. But yes, again, all the messaging has been like, we don't really see this being a likely thing we'll have to tap, because first of all, UBS have to go through about $5 billion or so of their own sort of funds before they can tap that government guarantee. So again, the messaging again, this is sort of highly unlikely to be used. And I guess one bit of evidence that they really do feel that is in terms of what happens after the $15 billion level is reached, there's been no real discussions or sort of debate about what might happen there.
Okay, Tom Metcalf, thank you very much indeed on the latest when it comes to UBS and the integration of Credit Suisse. Coming up, EV makers, they're getting a boost in Asia, certainly after an upbeat sales report from Tesla. Can the momentum continue? That is next. This is Bloomberg.
So is there more pressure when you're trying to win a basketball championship than when you're trying to please investors? Where's the greater pressure?
Oh, I think it's definitely trying to win a championship. It's hard because a lot of, like when you invest, and you know this, when you're investing, you can control a lot more things. When, you know, on a basketball court, you can't control whether somebody's going to make a shot. You've got to get lucky.
And what's the greater pleasure, making 5 times your money on a distressed debt investment or winning the NBA championship?
They're both fabulous. I wish I could do one each year. That would be great. But I think there's a great feeling in being right on an investment, that you've done a tremendous amount of work and you've made money for your clients, which I think is great. I think winning a championship it's a very surreal feeling because there's a whole city or state that is actually behind you. You know, we had 70,000 people at the finals, and we had them all outside. You had 17,000 in the stands, and then literally like 60,000 people outside. And when we won, like just the joy that you had brought to the city was phenomenal.
Markets count down in Europe from the financial centers of the world. Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
This is Markets Today. We're 30 minutes into your European trading day. Here are your top stories. The global risk-on rally extends amid optimism. US inflation is moderating. European indices are higher. Authority tested. President Emmanuel Macron pushes to restore order across France after almost a week of riots sparked by a police officer's fatal shooting of a teenager. Plus, Tesla and China's BYD set quarterly records when it comes to vehicle sales, surging demand for electric vehicles in evidence. Okay, so we are just starting, halfway through the first hour of trading here in Europe. And Tom, European equity markets then looking pretty positive, but really picking up from Friday's story on Wall Street, where we saw strength as a result partly of that PCE number. Looking ahead, we've got a holiday shortened week, I suppose, in a sense, because it's July 4th tomorrow.
Yeah, Independence Day tomorrow. But as you say, the inflation picture is moderating, and you certainly got a sense that the Fed's work is being done for it, at least around the edges when it comes to that PCE number that came out. In the US, yields are high. We're still looking at potentially the 2-year crossing that 5% level. That is a mark that we are focused on. But despite that, again, inflation is moving lower in the US, and equities are responding. That positive momentum is continuing again on the first day of the second half. Across the benchmark here in Europe, gains of 0.3%. The DAX is up 53 points. And here in the UK, the FTSE 100 benefiting from upside coming through from energy and basic resources, holding above that 7,500 level, at least for now. Worth noting, by the way, that the FTSE MIB in Italy is the outperformer, so far at least in the session, across the major indexes in Europe. Let's have a look at the sector breakdown then. And I flagged what's happening in energy. You've got the big miners as well in basic resources powering that sector higher. As you can look across how things are unfolding, you've just got 2 major sectors in the red this morning. Travel and leisure off by 0.3%, and construction flat. Technology is up by 0.5. There's the move higher, though, in basic resources. And again, the miners really rallying in the session today. 1.5% for basic resources, and some solid gains coming through for energy as well, Anna, gaining 1.3% as a sector.
Okay, so gains across European equity markets, gains across the Asian equity space as well, up by 1.4%. And one of the drivers for that seemed to be appetite for electric vehicles in China and beyond. Tesla and BYD have both set fresh sales records in the second quarter globally, widening their lead as the world's top-selling electric car makers. For more, let's bring in Bloomberg's auto czar, Craig Trudell, who can give us more details on this. Craig, very good morning to you. Thank you for joining us on Markets Today. So what is the market going to make of these Tesla numbers?
Yeah, I think a clear positive here. The deliveries are much higher than was expected. There was an expectation that Tesla would set a record, and they did that, and then some. I do think in terms of taking a step back and thinking about the broad scheme of things, this is a company that has 2 more factories than it had a year ago, early last year. So of course you would expect them to be selling more. The question going forward is going to be, what sort of hit to their margins did they take during the quarter? They did sort of indicate that they're very happy for margins to come down if it means continuing to increase deliveries. And we've seen this stock run quite a bit the last few weeks, so it's just a question of whether or not maybe we see a breather on the back of these numbers, despite the fact that they are quite strong.
No one can accuse Craig Trudell of drinking the Tesla Kool-Aid. He always brings a healthy skepticism to the numbers out of Tesla. Talk to us on that skepticism. 2 things: inventories and where things are playing out there, but also the lineup. They haven't refreshed their model. They haven't gone out with new models for how long, Craig?
Yeah, the Model Y is the newest vehicle in the lineup. I guess you could throw the Tesla Semi in there, but I think they're selling those in the dozens, right? And so this is a case of Musk actually viewing that as a strategic advantage. If you have less complexity, if you have a smaller lineup, that you're not necessarily adding complexity to manufacturing, that you can more smoothly manage through the supply chain constraints. And so I think that really worked to Tesla's advantage the last few years. The question is whether that continues to hold as the rest of the industry works through those supply chain issues, has a fresher set of vehicles. We may see Tesla get a boost over the next few months from the fact that they are reportedly going to update the Model 3 and Model Y. So those could be helpful toward the back half of the year, early next year. But there is a question of sort of what's next in terms of a full-blown new model. And by all indications, we're still maybe a couple years out from that coming to market, and a question of whether or not they're going to continue to have to take price down in order to keep these, somewhat older vehicles selling.
What about the performance in China? How's the business doing there, up against some competition there as well?
BYD has a much fresher lineup. They also, of course, play a much different game than Tesla in terms of the price points. So BYD is kind of running away with things in terms of fully electric vehicle sales and just total sales. Miraculously, actually, pulling ahead of even Volkswagen as the #1 brand in China. I think the electric vehicle sector in China is more competitive than anywhere else in the world. So you've seen Tesla actually sort of soak up some of the production that they have coming out of Shanghai by exporting to new markets, notably to Canada most recently.
What does the infrastructure story in China look like around electric vehicles? Because I feel that it's varied even in different parts of Europe, but it's probably changed even since you were in China, hasn't it? The extent to which the country is preparing all the time for the EV revolution. I mean, how much further ahead is China on that front?
Yeah, it's adding more charging points than the rest of the world combined, and has been doing that for some time. So whereas in the rest of the world, you have these conversations about, is infrastructure keeping up? The question among some in China is whether there are too many chargers for the number of electric vehicles.
That's incredible.
And so
you send one to my street.
Yeah, exactly. So I do think there are still challenges you see in sort of city centers with whether or not there's enough charging options for people who don't have a garage to park in. But this is a case where China is playing a very different game than the rest of the world. And so while we're seeing all of this buzz and all of this excitement about the U.S. finally getting its head in the game in terms of EVs, they've got a long way to go, and the rest of the world has a long way to go to keep up with China.
Because there are incentives linked to the Inflation Reduction Act, aren't there, in the US? But that stat is still remarkable. I mean, all the stats out of China, most of them are pretty remarkable, but adding more electric vehicle charging points than every other country combined, and they have been doing for some years. Craig Trudell, thank you very much indeed, of course, on the Tesla story. We'll stay with China, though, and to the politics, at least the geopolitics. US Treasury Secretary Janet Yellen heading to Beijing this week. That makes her the second member of President Biden's cabinet to visit the Chinese capital. Bloomberg's Jill Jesus joins us for the details. Jill, what do we know about the secretary's visit then?
Right, so what I think we're looking for right now to this visit, at least what we're hearing from the Treasury Department, is this is really about sort of building more of that communication between the U.S. and China. I think, Tom, as you alluded to, this is really only the second high-profile visit to China in really years by a key U.S. official after Antony Blinken visited China just last month. So what I think the Treasury Department wants to look at here is, first of all, it's probably pressing China a little bit on its role role in providing some debt relief to distressed developing nations. That's been a really key focus that Janet Yellen has focused on in the last few months. But also, I think she's likely to face some pressure on the Beijing side. Remember that the U.S. is focused on pressuring China over sanctions or trying to cut China off from key technologies in recent months has been really a core part of the tension developing between the U.S. and China. We saw a little bit of that with Blinken's visit. I think that in some efforts to smooth over ties between the world's two largest economies, I think that's probably going to continue this time around. As of right now, we're not expecting her to meet with Xi Jinping. We'll have to see what other leaders within China she'll actually meet there. But ultimately, yes, it's really about smoothing ties between these two economies as we get into her visit expected later this week.
Yeah, really interesting to watch that, as you say, on the heels of other visits that we have seen. Earlier on in the program, Jill, we got an interesting take from Bloomberg Economics on what to read into the appointment of a new party chief at the PBOC. It was a sort of continuity interpretation. What are you hearing?
Yes, I think that's what we're hearing as well, is this idea of continuity over any kind of meaningful massive change as of right now. So look, this new PBOC party chief, party secretary, I think what we're looking at is he's likely to become the next PBOC governor, succeeding Yi Gang. That's not incredibly surprising, considering when Yi was appointed for this position again back in March, continuing another term. He's already over the retirement limit. So we were expecting some movement at the PBOC in the coming months. This, again, it's a party secretary role. Pan is not the new governor at this point, but ultimately it does seem like he's a career technocrat who's really sort of driven home those same messages of that level of continuity. And I think that as China gets into needing to contend with continued downward pressure on the yuan, obviously the story of the economic recovery in China and signs that it's faltering, any sort of consistency in terms of monetary policy easing is going to be really critical to watch here. And I think that's at least what we're seeing going forward. So we'll see how his role shapes up. But ultimately, yes, I think continuity is still the message here to look out for.
Jill, thanks very much. Jill Desis with a number of the themes we're dealing with out of China overnight. Coming up on the program, from Adidas and Alphabet to Vinci, we'll take a look at the 10 companies to watch in the third quarter. We'll get the Bloomberg Intelligence take on companies in focus. This is Bloomberg.
What do you like most about your job?
I think the people. I mean, ultimately, we're a people business. A lot of what my job is as CEO of the company is to give those people sort of motivation, to tell them where we're going, to encourage them to come up and do their best work, to encourage them to collaborate. Sometimes you sort of think you're almost a psychologist, as you are a business leader, I think, sometimes.
And so what's your best piece of advice?
I love pitches. I love being sort of leading from the front, if you like, and spending times with teams. I love to see the work that we're doing when we pitch for a piece of new business, often when we come together. So I guess I try and put myself in the seat of the client. And what's the client going to think when they see this work? Are they going to be excited? Is it going to turn their brand around? How's it going to resonate with their consumers? So as much as possible, I think probably I try and play that role.
Our studios in New York and San Francisco. Our expert hosts have the data and analysis about the companies you know and the startups to watch. Plus, the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West. Only on Bloomberg Television, your global business authority. Information you want, analysis you trust, everything you need to get set for the start of U.S. trading. Watch Bloomberg The Open with Jonathan Ferro. Weekdays on Bloomberg.
This is Markets Today. We are 43 minutes into today's market session, European equity markets, that is, and we're up by 0.2% across European stocks. We've seen perhaps a surprising bounce in basic resource stocks then, Tom, given that the iron ore prices went lower on Chinese property fears. But I suppose we're risk on generally, aren't we? And as a result of that, basic resource stocks have gone higher.
There is one stock that is holding back the FTSE 100 from performing better than it already is. The FTSE 100 currently up 0.2%, but AstraZeneca, listed in the UK, shares for that company falling after it gave an update in terms of results from a high-level study of a new cancer medicine. And they came out, the company said it does help patients with the most common form of lung cancer live longer, but they were waiting, Jeffries says, Mr. Jeffries, for a few more details about exactly how this drug performs. And so you've got disappointment there, and the stock, as you can see, falling close to 5%.
Close to 5% down then. Yes, the Jeffries line, the AstraZeneca's description of the data suggested that the benefit is less pronounced than hoped. And so that's where some of the disappointment lies. The company also reported some deaths in the trial, raising safety concerns. The trial is, though, continuing because it's not sort of a fully matured trial yet. So we will watch for further updates there. In the meantime, the share price of Astra goes lower. Tom, we're just waiting for data coming out on Italy, on the manufacturing PMI. And we've been gradually building up a picture this morning. We had the Spanish number a moment ago. Staying in contraction territory so far has been the theme.
And Raffaele Tanconi was talking to us about how she expects that continue, the softness around the manufacturing picture in Europe. 48 was the number out of Spain, which is essentially in line with the forecast. But again, as you say, in contraction territory, below that 50 line for Spain. The Spanish inflation picture, of course, looks very different. And Spain is actually facing a much more benign picture when it comes to increases in prices. The Italian June manufacturing now, PMI falling to 43.8. That is a big drop from the previous month of 45.9 and well below the forecast as well. So 43.8 is the PMI, manufacturing PMI for Italy for the month of June. That is a pretty grim reading.
And this is manufacturing, and we talked to Raffaella about the divergence we've seen thematically between manufacturing and services. Services holding up well, manufacturing being poor. More on services later in the week, but this is what we have for you right now in terms of the manufacturing picture, which does look weak out of Italy. So let's take a look at, well, we'll put that to one side for the moment and take a look at the 10 companies to watch in the third quarter. Bloomberg Intelligence has been putting together a list, and Tim Craighead joins us from Bloomberg Intelligence with some of the details. I don't know if that divergence between manufacturing and services is reflected at all in your list, Tim, but you've been putting together 10 companies to watch, essentially. Tell us a bit more about them.
Yeah, I'll put this into some context. And the good news as it relates to that Italian story is this is company specific. We're looking for situations where we have a strong fundamental view from our bottom-up analysts, number one. Number two, that is different from what we perceive the market is expecting. And number three, maybe most importantly, there are catalysts ahead that can change the market mentality towards what we think is happening. So with that said, there's about 100 of these ideas we have across sectors, across regions. 10 of them in particular have catalysts that we think are particularly pertinent this quarter. And so that's where this 10 comes together.
And a couple of those catalysts, AI, but also the energy shift that we're starting to see.
Yeah, I mean, there are a few different themes that percolate through here, and AI is one of them. There's a lot of fear about Google being competed against, competed away.
Behind.
And in fact, we see quite the opposite. All the demand from AI that will percolate through increases the demand for cloud services, which are core to what Google provides from an infrastructure perspective. We also see other things going on with YouTube, for example. So we're actually positive on Alphabet fundamentally as it relates to the AI opportunity. Energy transition is another theme. Vence is, which I'll always pronounce wrong from a French perspective, is core to that from the standpoint of all of that money being invested, both Europe and the US in energy transition. It's one of the largest engineering and construction companies globally. And by the way, They also own Gatwick with the increase in travel and whatnot. That's a good story as well.
Yes, I'm glad to see you didn't miss the opportunity to put AI in the research. That seems important.
Pertinent, yes. You can't. Well, you talk about the next quarter without talking about AI and the AI theme, right? And you've broken that down for us. Then the economics, of course, we've just been touching on that data that's come through from Spain and Italy. In terms of how that filters across your thinking, where is the resilience beyond the themes? Which companies are showing that resilience in a slower growth, tighter margin environment?
Well, I'll throw out a couple of ideas, actually on both sides of that divide. One, look at Adidas. We think that its business has basically done its thing from a negative perspective.
With the whole Yeezy impact.
Yeah, the overhang of all that stock.
Exactly.
Right.
They have a new CEO who's coming in. He did wonders at Puma, and we think he'll work his magic at Adidas, notwithstanding the economic backdrop. On the flip side, we do have ideas on here. There are 4 that are negative in orientation. And some of that is pure good old-fashioned economics. Givaudan, the flavors and fragrances company, is quite dependent on big consumer product companies innovating and spending on R&D for new products. We think that's at risk, in part because of the economics, in part because volumes we think will slow broadly from where they've really jacked up price. Another negative idea, Cheesecake Factory. If you travel to the U.S., this is that restaurant that's...
It's terrible for the waste.
Yes, they have huge sizes of cheesecake and other casual food. And,
delicious cheesecake.
The long story there, long story short is, it's a short story, is that with economic activity slowing and expectations for significant comparable store sales gains for these guys, we just think that there's a disconnect here. So, at any rate.
Tim, I love that we're ending on cheesecake. Have you frequented a Cheesecake Factory?
I have, yes.
Yeah, you're still recovering.
I'm thinking about it now. Tim, thank you very much. Bloomberg Intelligence, Tim Craighead, with his themes for the rest of the year and some of the things to watch out for, including these 10 stocks to watch as we get towards the end of the year.
And coming up, Apple's big release of the summer. Well, it hits a snag as the $3 trillion company is reported to be cutting production plans for its Vision Pro headset. More on that next. This is Bloomberg.
Everybody want to be a consultant, and what are all these consultants doing?
Well, David, I think that we actually defy the label consultant, because sometimes consultant seems to imply that we only give advice. And when you look at what Accenture does, we're really different than the traditional version of a consultant. We're really about relevance and results, and that's what is driving our business.
What about a consulting project? In my example, I'm the CEO, I have a problem, I call you up, I say, solve my problem or give me a solution.
We don't operate as big companies permanently in crisis mode. And so when you think about like how long does it solve things, a lot of it starts with, the company being willing to set aggressive goals. And so what we are trying to do now is work with our clients to work differently and to work faster.
This is Markets Today, 8:53 here in London, so 53 minutes into our trading session. Some positivity across European equity markets. US futures point to a flat start to US trading. It'll be a half day there over in the US. We've got the French manufacturing PMI number coming in at 46. That's slightly better than the 45.5 that was forecast and the prior reading of 45.5. It is below 50. It's not as bad as the 43 or so that we got from Italy a moment ago, though, Tom. So that was a real weak reading on the Italian manufacturing space. But underperformance in the manufacturing side of the Eurozone economy remains then a big theme.
Okay, and we're counting down, of course, to the German number as well. And there's a slightly different spin on manufacturing now because it's a bit of a challenge, it seems, for Apple, at least one of its products. 7 years in development and hailed as the most significant product launch since the iPhone. But now, according to the Financial Times, Apple is actually making drastic cuts to production forecasts for its mixed reality Vision Pro headset. It comes in the wake of the tech giant hitting a $3 trillion valuation on Friday, cementing its place as the world's most valuable company. Let's bring in Alex Webb from Bloomberg Quick Take for the details. Tell us what is happening with the headset, the Vision headset, and why this is a challenge for Apple at this point.
So we should say this is all based on reporting for the Financial Times. The expectation, Apple has never announced a number publicly of how many units it expects to sell, but the reporting have been really that they expect to hit maybe 350,000 units in the first year. The FT is suggesting that it's going to be quite a lot lower than that. The issue really is that in any new product, particularly a new product category, and in this we can really see there is some bleeding edge technology, particularly when it comes to the displays, the micro OLED displays in the headsets. They are getting low yield, it seems, on the manufacturing of them. That means that there are fewer, a lower percentage of them are usable or meet Apple's specs than they would like of the full production run. So that means that actually they're perhaps not able to make as many as they would like in this first year. Now, that might also be why you go for a lower number in the first year, because if you were trying to do a 12 million unit launch or a meaningful number, then having these problems at this stage would be a far bigger issue. That's why you come in, perhaps, you don't quite know Tim Cook's thinking, but you come in perhaps with a higher priced object, which builds in a little bit of buffer on price for that sort of thing, with a lower volume expectation, and it gives you a little bit of wiggle room.
Just pause that thought for a moment. I just want to get to the German manufacturing PMI. We're tracking these all morning. Confirmation that that economy is still firmly in contraction then, at least that's what this indicator suggests. 40.6 is what we got here, below the survey number of 41 and below the prior period of 41. So some weakness building across the European manufacturing space would be the takeaway there. Back to the conversation about Apple then, Alex. What does this mean then for the business? Is this significant for Apple as a business?
I mean, at this stage, no. And it assumes, though, that you're able to fix the problem further down the line. At this stage, the kind of assumption is the Vision Pro. The fact it's called the Pro suggests there might be at a later date a Vision or some other name, which is really the mass market product. Therefore, this one is really trying to get into the hands of, more than anyone else, developers, the people who will then try it out, build and develop apps and services that work on the device, which will therefore make a lower price version, which might come further down the line, more appealing because there's a bunch more things you can do with it.
Alex Webb from Bloomberg Quick Take on Apple's challenges around its headset. Thank you very much indeed. We've walked you through some of the manufacturing data, of course, across the Eurozone. And the top line is manufacturing continues to slow in that economy. Across your equities, Anna, you're currently seeing gains of 0.2% across European stocks.
Yeah, absolutely. 0.2% higher on Stock 600. Looking for a shortened trading day, of course, over in the United States today. Futures are pretty flat stateside. Nasdaq futures up 0.1%. E-minis are flat. That is it for markets today. This is Bloomberg.
race relations in the United States are much better than when you were growing up in Mississippi, or do you think we've made less progress than you think we should have made?
Both. I think that much better than when I was growing up. There's so many people who occupy areas and I never thought I would see them in. But I would have hoped it would be better. It's been a lot of progress, and somehow we're in an era now where, in spite of the progress, race relations in certain areas has become very scary. You know, some of the things that one reads about now remind me of growing up in Mississippi.
News breaks. No one covers the world like Bloomberg.
The image of Vladimir Putin as the all-powerful leader has been rattled already.
History was made here at the federal courthouse in Miami when Donald Trump became the first ever former president to ever be arraigned on federal charges.
We're going to need a new engine technology, and that's where the real battle lies. And whoever makes that decision first is going to have a huge impact on this industry.
Bloomberg, your global business authority. This month, Bloomberg brings you the latest from China's 14th Annual National People's Congress, including China's COVID recovery, economic outlook, and geopolitical tensions. Continuing coverage this week on Bloomberg.
This is Bloomberg.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
A very good morning and welcome to The Pulse. I'm Manus Granny in Dubai, and for Francine Lacqua today on the stories that set the agenda on the program. The global rally extends amid optimism that U.S. inflation is moderating. But PIMCO warns about the disconnect between valuations and a worsening economic backdrop. Authority-tested President Emmanuel Macron pushes to restore order across France after almost a week of riots, sparked by a police officer's fatal shooting of a teenager as the cost mounts. Plus, putting the foot down, Tesla and China's BYD set quarterly sales records on surging demand for electric vehicles. Very good morning. Francine is out for the day. You have the pleasure of my company for the next hour. Quick check on markets. We've just had a red headline on the manufacturing for Europe. We are firmly in contraction, 43.4. The preliminary estimate was for 43.2. So you are just seeing across the assets here, equities, NASDAQ put on 2% last week. The question you must ask yourself as you start the second half of the year, you have traded equities pretty much with immunity. Will you be able to continue to do so with impunity going into the second half of the year? Oil steadies. I mean, it's been a record losing streak for 4 quarters. The hedge funds are the most bearish on WTI since November 2017. A battle royal is being drawn between the specs in the market and the meeting of the oil ministers in Vienna, which I will leave for after this show. Rates, you're seeing yields rise 3.84%. There was a massive dislocation last Thursday on the better data. Rate cuts are gone. How many more rate hikes will come? The dollar is up, however. The hedge funds are bailing on their positions. Dollar longs fall to the lowest since March. You are just seeing a structural repositioning in the dollar. To the map across Europe, as I say, firmly in a manufacturing retrenchment. There are riots in France. This is a state of play on European equities. Let's have a quick look at that for you. You have got small gains across the board in terms of the equity markets. We'll bring that to you in just a second. As I say, you had a breaking red headline there on the manufacturing side of the European complex. Let's just have a look at the European equity map. Here we go. Actually, the other dynamic is this. This is what you really need to focus on, which is the 2s, 10s, the inversion. It's deep, it's malevolent, and is it prescient? That is the question. You're looking at one of the deepest and darkest moments in the bond inversion in decades, in over 30 years. Is this disconnect between the equity market and the bond market something which will come to pass more aggressively as we go into the second half of the year? That's State of Play on the markets. Let's move the agenda along and begin with our main story this morning on France, which is, of course, the protests in France have continued for a fifth night as the police killing of a teenager gripped the country. Some 45,000 police were deployed in an effort to contain clashes that left hundreds of public buildings and shops damaged and ransacked. Our correspondent for France, Caroline Conin, joins me now from Paris. Caroline, talk me through the fifth night of protests and the estimated cost to the economy at this stage. Caroline.
The peak of the riots actually may have passed because we only saw about 150 arrests last night compared to more than 700, for example, on Saturday and 1,300 on Friday night. But still, of course, dozens of banks, supermarkets, 700 supermarkets, according to the French finance minister, schools, public buildings have been damaged. There's been some looting. Some buildings have been vandalized over the past few days. So, of course, this will cost a lot to the French economy. The first estimate is at least 100 million euros in damages. But this is, of course, if the riots stop today. So it is unclear whether the riots will continue over the next few nights. As you said, about 45,000 police officers are deployed every night across the country. And the rioters are usually very young, between 14 and 18 years old. And they come from those poor suburbs, what we call cités, in France, from low-income neighborhoods where the population is undereducated, underemployed, and very often from immigrant descent. So, of course, this means the government will also have to address the deep issues in those neighborhoods and the discrimination that the police may have faced in the case of the killing of this teenager last Tuesday. And clearly, as you can see on all the French newspapers today, France is still shocked. We'll see how the situation evolves tonight and over the next few nights.
Yeah, Caroline, and certainly Emmanuel Macron blaming social media for a great deal of what has happened and escalated over the past couple of nights. We'll return to this story a little bit later on with you, Caroline Conin in Paris. I'm joined now by John Bilton, Head of Global Multi-Asset Strategy at JP Morgan Asset Management. John, many asset managers often join myself and Francine and they say we never trade geopolitics. So I'm not asking you to trade geopolitics. How serious a moment is this for France, for Europe, and just in terms of risks as you look at it this morning?
Well, look, I think you're absolutely right to home in on geopolitics being something which doesn't necessarily drive economics. I mean, we've seen this time after time. I mean, obviously, it's shocking scenes in France. We certainly hope that semblance of calm comes back in. But I think at the moment, the reality is we should be focusing on what the consumer is doing, what company earnings are telling us. Of course, we've got earnings season coming up very soon, and where the ECB are going after Sintra last week. So I think that's really going to be what drives the economic outlook from here on in.
Briefly, where does the ECB go post-Sintra?
Well, it's super interesting looking at the PMIs, really, isn't it? We've got a hike nailed on pretty much for July. We think we probably see 4% as the ECB's terminal rate, but the PMI is showing this sort of slowing in manufacturing, despite the fact we've got a very strong consumer in Europe. Probably tells us that the ECB are very close towards the end of what has been a fairly hawkish run for them.
The consequence of that is, of course, we've had this, as I said, we've been able to gorge on equities with immunity, but can we trade, can we gorge the second half with impunity? That's what I want to know from a risk perspective for the equity market, first of all, John.
Well, I love the way you've said gorge on equities. It put me immediately in mind of that old Warren Buffett phrase, which is be greedy when everyone's fearful. But let's look at the facts. If you go back over 50-odd years, in fact, if you go back to 1950 and you look at years when you've had a positive first half in the S&P 500, 78% of the time, you get a positive second half. Momentum in economies tends to build slowly and stably through time. I think we've got to be very careful not to continue to look for this recession, which is apparently still 6 months around the corner some 18 months after it was first called. So I think we've got to look at the facts, we've got to look at the earnings data, we've got to look at valuations, we've got to look at company statements. And the reality is, I think that equity markets still are extending something of a wall of worry. Now, it's been a very, very strong couple of weeks technically, so I've certainly got sympathy for those who want to sit on their hands and look for a slightly better entry point. But to be honest with you, I'd say don't be too greedy, because those corrections downwards could be short-lived.
I mean, I should perhaps temper my enthusiasm. I've been 3 weeks away traveling different countries. So when I talk about gorging, I suppose really what I am talking about is this, voracious appetite for Japan, which has been evident. I mean, 30-year high on the topics, etc. When you look at the 5 trillion added to the NASDAQ, the Japan market trading the highest since 1990s, and the mega caps putting on 74%. Are they just not bothered about the deepest inversion in 30 years in the curve?
I think there's a bit more to it than that. I mean, look, I think front and center, anybody who is on a more constructive end of this, and I include myself within that, looks at the yield curve with some level of concern. But there are three things actually that I would flag. Number one, we have to account for inflation, which of course has been pushing up front-end rates and is now gradually coming down. So let's wait and see where that goes. Secondly, we all know that the yield curve is the best unbiased indicator of forward rate expectations. If everyone expects a recession in the forward, not surprising that you get an inverted curve. And number three, what I would say is that this looks like a late cycle environment in many economic indicators, not least the curve, but the imbalances, the excess borrowing, which is often coincident with those indicators, is notable by its absence this time around.
Okay, John, you're going to stay with us. We've got a few more topics to get through. Stay there, seated and ready to go in London. Coming up, the UBS boss, Sergio Motti, is said to be wary of floating Credit Suisse's domestic unit. The Universal Bank for sale or not on Bahnhofstrasse. We have the details on Bloomberg.
We can replicate Tesla. Tesla is a unique because when they founded and then the personality behind it, the product is beautiful, technologically very, very strong. So in many areas, Tesla is Tesla, but Xpeng is Xpeng. We want to focus on what we think is important for our customers. Our customer like beautifully designed vehicles, either it's large SUV or sports sedan. We believe we have a very, very appealing family look that our customers is really attracted to. They like to have user-friendly features inside the cabin that has a technology feel. It's very smart. It enables them to really utilize the vehicle that's different.
The top names in business are on Bloomberg.
For Indigo, this is a 500 planes order. That's the biggest order ever in terms of number of planes. It doesn't change the short-term perspective on ramping up the production.
All our aircraft deliveries are delayed. The supply chain that was really decimated during COVID.
It's a real challenge for all the OEMs at the moment, but we absolutely have to have those aircraft delivered on time.
Nobody covers business like Bloomberg, your global business authority.
The conversations that matter and the insights that you need. This is The Pulse. I'm Menace Cranny in Dubai. So UBS is planning to clarify next month that its Credit Suisse rescue will rely on funding from the Swiss taxpayers. Meanwhile, a Swiss newspaper has reported that UBS isn't planning an IPO for the domestic unit of Credit Suisse. Two very contentious issues that have plagued this story. Marion Halfemeyer is joining me now from Zurich. Marion, good to see you today. So talk me through the options. I mean, the Swiss unit within Credit Suisse is the jewel, as it were. It really was the jewel in this deal. What are the real options for that business?
So UBS's CEO, Sergio Monti, has said that the base case is they want to keep this Swiss universal bank, the Swiss domestic entity of Credit Suisse. However, after the deal was announced earlier this year, there was some scrutiny from politicians and locally around what that would mean for jobs and for the market share components of the two banks. So they've been analyzing that, and they have said that they plan to announce that in the third quarter. So we expect some information at the end of August when they report their second quarter results. So realistically, our options here are they could keep it and integrate it with their own domestic bank, and then there were the options of potentially floating it in an IPO or spinning it off in some way in keeping a shareholding. It looks like, and from what we're hearing from our contacts as well, is that they're really keen to keep it, and as he said, it's a base scenario.
And then, of course, we have this other report referring to Thomas Gottstein. He stepped down. You recall that weekend, I ended up having the chairman walk in rather than Gottstein. Now, this is a report that FINMA are investigating Gottstein. What do we know? What does the report say?
So this dates back to an investigation that FINMA, the Swiss banking regulator here, opened up against 4 individuals in February related to the Greensill collapse. So you'll remember Credit Suisse had this big collapse with $10 billion worth of funds related to supply chain finance. They are still investigating individuals' roles in this, and so allegedly, according to these reports, Thomas Gottstein, the former CEO of Credit Suisse, is one of those 4 individuals.
Okay, we'll certainly track this story and keep an eye on those results at the end of August for UBS in terms of just how much help they need from the government. Marion, thank you very much. Marion Halfemeyer there in Zurich. John Bilton is our guest this morning, Head of Global Multi-Asset Strategy at JP Morgan Asset Management, still with us. So we won't ask you about buying JP Morgan stock because that would just be precarious. But John, on a broader perspective, here we are, the UBS transformation of Credit Suisse as a joined-up entity has huge ramifications for the dividend and the buyback, the two great unknowns on UBS. I look at American banks upping the dividend payout on Friday, your own house being one of them. How important is the dividend story to distinguishing being long America or long Europe Swiss?
Well, I mean, I think this is an interesting point. I think we've got to take a step back from any individual company, of course, and we've got to look at where this has led us. Think back to March, and we saw real concern around the US regional banking sector, and of course some fairly dark mutterings about the idea that we were going to see Lehman 2.0 and that all of a sudden the whole system would come under pressure. And the reality is, I think what we've seen subsequently is, number one, the Fed acted extremely quickly to put in a backstop. Number two, we can see from the larger scale banking sector within the US that this is a very specific business model issue with the regionals. But then crucially, Europe. I think, for a decade and more since the sovereign crisis, it's been possible to think any time there's an issue in the banking sector, even if it's just the whiff of an issue, made sense to be underweight the European banks. And I think that the business models and the stability of the dividend and the buybacks that are going on suggest that those days are behind us. On 0.6, 0.7 times price to tangible book, the sector actually is now one of the stabilizing parts of the European index as opposed to one of the dangers for the European index.
There you go. And banks at one stage, a couple of fund managers have come on here and they've sort of said, look, we wouldn't touch them with a barge pole. You talk about convexity. I'm interested to understand how I prepare for convexity in the second half of the year, because you're generally pro-risk. So how do I prepare, or what is your perspective on convexity in the second half?
Well, I think the way to look at it is if one is running a balanced portfolio, as we're privileged to do across our books of business, what we're looking for is to really understand how we can have decent returns in any state of the world. This is an uncertain environment, and while, as you probably understand, I sit on the more constructive end, it's not lost on me that there remain some pretty profound risks. And so to that end, we want to be overweight duration. Now, of course, that's really giving us good exposure in a weaker economic environment, and we'd be clipping the coupon if we run down the middle from here. What it doesn't do for us is give us much protection if actually some of this more constructive narrative really hits, we get a pause in the central bank's hiking cycle, and the economy actually does deliver this soft landing that's been spoken of. Under those circumstances, not having some exposure to the top side means that you're exposed. So for us, it's having balance and robustness in all of those possible states of the world, and just making sure that we've got something which allows us to be able to deliver gradual, steady, long-term gains. And for that reason, we need to think about where we can add risk into a portfolio, particularly if it's one which has duration overweights.
And I know that you have upgraded both your equity, and I'm interested to see that you've moved to neutral on your credit position. But this takes us to a viewer question which has come in. So let me just put this to you. You've already in part answered this. You said, look, it's going to be not necessarily a hard landing, hence the reason why you have that little bit more proclivity for equity and credit risk. The question is this. Are we ready for a shallower yet longer recession? Well, you've already answered that, yes. But what do you think the repercussions are for refinancing in 2024, 2025? A lot of that refinancing pain has yet to be affected on the bottom line. Where will the refinancing pain be most pronounced, I suppose, is what goes through my mind for this question from a viewer. What would you say to that?
Well, I think we're already seeing where the pain is hitting. We've seen it in the regional banks, we've seen it in the real estate sector, and these are areas where we have seen some stress coming through. Also, we've seen those borrowers who have perhaps been more marginal coming into the loans market with floating rates already begin to have those pressure on their balance sheets. It's worth noting that the high yield market today is more than 50% double Bs. There's only 10% or so of triple Cs in the main US index. So this is a very different index to what it was 10, 20 years ago. More importantly, our belief is that as we see credit become available, albeit at a higher price, it will force companies to make choices more around the projects and the investments that they make. And I think there's been an argument for some time, which has been that we've seen, a rising tide floating all boats because of very low interest rates. This actually forces more behavior which actually focuses on the growth and the long-term viability of businesses. So it's not that credit isn't available. Okay. It just has a certain cost, and companies can and are adapting to that within their financial strategy.
Yeah, about 450 to 600 basis points over base rates relative to where we were over a year ago. John, thank you very much. John Bilton, my guest this morning on The Markets. Coming up, outpacing momentum. EV makers are posting record sales on the demand side. The details to come. Are you long Tesla? This is Bloomberg.
Was the brainchild of Apollo CEO Mark Rowan. In January, Apollo closed its $11 billion all-stock merger with Athene Holding. It had already owned 35% of the insurer. Here's what Apollo gets out of the deal. Assets under management. Apollo expects them to double to about $1 trillion by 2026. Much of that projected growth will come from the merger, and those assets are especially attractive to Apollo. Insurance companies typically go after much more modest returns than buyout investors. That will give Apollo more options for investing the cash. Athene is a steady provider of fee income. It has grown into one of the nation's biggest holders of fixed annuities. those retirement savings products favored by risk-averse customers. The merger will also allow Apollo to simplify its governance. It gave up its dual-class share structure and adopted a one-share, one-vote plan. The hope is that will eventually lead to Apollo's inclusion in the S&P 500.
The top names in global leadership are on Bloomberg.
We have reformed the whole ecosystem around attracting foreign direct investment.
To get everybody to the table was the most difficult thing. Now we're here. The next is consummation.
The commitment is there. Now what we need to see is the actions.
Nobody covers the top global leaders like Bloomberg Television and Radio, your global business authority. In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Watch Bloomberg ETF IQ.
The conversations that matter, the insights that you need. This is The Pulse. I'm Manus Crenny in Dubai. Tesla and BYD have both set fresh sales records in the second quarter, widening their lead as the world's top-selling electric car makers. Elon Musk-led Tesla delivered 466,000 cars worldwide, outpacing the street's estimates. BYD posted the best-ever quarterly sales results for its new energy vehicles, half fully electric sales, and the other were plug-in hybrids. Derided many years ago by Elon Musk, BYD snaps at the Tesla heels. Alex Webb from QuickTake joins me now. So this momentum is driving faster and faster. Who's ahead?
Well, I mean, BYD is selling a lot more units. Tesla remains at the very, very punchy market cap that it has. BYD has a slightly different approach. Obviously, not all of its vehicles are electric, and it has a far bigger market share in its home market of China. There's a slightly different approach in China where there isn't just this hunger for endless range. They're a little bit savvier about saying, well, actually, the average range driven by a vehicle any given day is probably only 30, 40 miles tops. So they make smaller battery vehicles, which actually have done pretty well in gaining share in their home market.
Okay, well, we'll keep an eye on those, see how they open a little bit later on today. Alex, we'll come back to the Apple AI, the future. Take 3 weeks on a beach and spend a couple of $1,000. That's the alternative to $3,500 for your alternative reality on your face. Alex Webb on the Tesla story. Coming up, we return to the protests in France. They're up for the 5th straight night, right here on Bloomberg.
What do you like most about your job?
I think the people. I mean, ultimately, we're a people business. A lot of what my job is as CEO of the company is to give those people sort of motivation, to tell them where we're going, to encourage them to come up and do their best work, to encourage them to collaborate. Sometimes you sort of think you're almost a psychologist, as you are a business leader, I think, sometimes.
And so what's your best piece of advice?
I love pitches. I love being sort of leading from the front, if you like, and spending times with teams. I love to see the work that we're doing. When we pitch for a piece of new business, often when we come together. So I guess I try and put myself in the seat of the client. And what's the client going to think when they see this work? Are they going to be excited? Is it going to turn their brand around? How's it going to resonate with their consumers? So as much as possible, I think probably I'll try and play that role.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
Back to Bloomberg Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance. Welcome to Bloomberg Markets, trying to open.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg.
The global rally extends amid optimism. U.S. inflation is moderating, but PIMCO warns about the disconnect between valuations and worsening economic backdrop. Authority tested, President Emmanuel Macron pushes to restore order across France after almost a week of riots sparked by a police officer's fatal shooting of a teenager as the costs mount. Plus, putting the foot down, Tesla and China's BYD set quarterly sales records on surging demand for electric vehicles. Good morning. Welcome to The Pulse. I'm Manus Cranny in Dubai, in for Francine Lacqua. Well, protests in France have continued for a fifth straight night over the police killing of a teenager. 45,000 police were deployed across France in an effort to contain the clashes that left hundreds of public buildings and shops damaged or ransacked. We're joined now by Bloomberg's Caroline Conin in Paris. Caroline, excuse me, Freudian slip there, in for Francine and speaking to Caroline. It's all very French. But on a serious note, I mean, these were the fifth night of serious protests, and the reaction from Macron's government has been about deploying forces. Are we anywhere closer to some kind of mediation and a reduction in the violence?
I think the main problem, Manus, is that even though these riots may calm down over the next few days, there are still deep issues in the French society with this population of immigrant descent that is not integrated enough in the French society. And this is where the critics against Emmanuel Macron are focusing on. Basically, there's been no plan of action for those so-called cités, the suburbs of these big towns in France, where you have a young population, often undereducated, underemployed, and not totally integrated with the rest of the society, and that has a feeling also of resentment and discrimination. So clearly, this is something that the government will have to address. President Macron is meeting today with the heads of the National Assembly and the French Senate. Tomorrow, he's going to also invite more than 200 mayors, local mayors of those cities that have been targeted by the rioters over the past few days, that have suffered, for example, attacks on public buildings, on schools, on supermarkets. And clearly, there is a feeling that these deep issues also need to be addressed because since the last riots in France in 2005, where you had a similar incident with two boys dying after trying to escape from the police, not much has been done in order to really integrate those neighborhoods, those young people who feel like they are on the sidelines of the French society.
Caroline, thank you very much. Caroline Conin in Paris. Let's continue the conversation with Fabrice Porcier, CEO of political consultancy Rasmussen Global. Fabrice, thank you for being with us. It's interesting that we compare with 2005, the state of the French society then, the last time we had a state of emergency. Does Macron need to declare a state of emergency, or would that be to admit that he's lost control?
Well, it seems that things have
fairly de-escalated compared to a few nights ago. So I guess there's less need for declaring a state of emergency. But what is clear is that this is not, I think, a protest or riot against Macron. This is more part of the French society, like your correspondent just said, that is actually rebelling against their vision of public authority, of law and order, triggered by obviously this shooting at close range by a police officer on a teenager. So it's important to put that into the right context. Again, it's a disenfranchised part of the French society that is rebelling via violence against what they see as public authority, not necessarily against Macron or his policies.
But he has been in charge for quite a while, and I suppose the question goes to the heart of what should he now do to bring the disenfranchised in, to make not just statements of inclusivity, but actions of inclusivity. What would you be advising him to do right now? You've been a member of En Marche, as it was called then, so you're very familiar with the environment around Macron. What should they be advising him to do to deliver inclusivity?
Quite frankly, I think of all the French presidents and heads of governments in France over the last, I would say, 3-4 decades, since we have these issues of les banlieues, I think Macron's gone a long way, and much further than many of his predecessors, in actually allowing this part of the French society to have opportunities to, be able to join the economy through this kind of new form of gig economies like Uber and so on. So I think he's done much more than many to try to include part of that French society into the broader economy. But there is a question of cultural differences and real backlash. Also, it's important to underline, the polarization is not just from les banlieues. It's also, if you look at the French police force and the statement by the French police union, it is really, really radical. They are talking about getting rid of the vermin, getting rid of those kind of parts of the French society. So I think you are seeing a polarization of French society that, in my view, goes well beyond Macron's mandate and is a structural problem in the French society.
Many people are writing that this is a George Floyd moment that we saw in 2020 in the United States of America. Is that the correct comparison, or is it culturally inappropriate?
Obviously, the United States and France have very different social mix, political fabric. So I will be careful about drawing comparisons here. But you do have indeed a sort of, again, like I mentioned, polarization between part of the French society that feels socially and economically disenfranchised, and another part, here in this case, is the police force that feels very strongly about its mission, so much that I think it made some statement that I think the French police union was talking about being in resistance, including potentially against the French government. So I think you do have a problem of polarization similar to what you're seeing in the United States.
There is this social divide between, one could say, metropolitan liberal elite within large cities, specifically the capital, which is obviously Paris, and the rest of the country. Is this a huge divide which Macron can tackle in any way? Is that in part what these protests are about, this disenfranchisement of many of the younger parts of society, but they're not part of that metropolitan liberal elite? I mean, it's very similar to some of the things that we saw in the United Kingdom in 2016 and 2015 as we went up to the Brexit vote. Is that part of the issue here?
I think it's important to be nuanced here. What we call les banlieues, so the suburbs where many of these French youth come from and live, actually also where a lot of people working every day to sustain the French economy, where also a lot of those French third or fourth generation migrants are actually building businesses, making real kind of economic life. So I think it's important not to see les banlieues as just purely disenfranchised versus the city centers or the French rurality, is actually there are lots of people working in the banlieue, including from this youth. So I think things have changed, but not enough to indeed carry and those who feel left behind, both politically, economically, but also culturally.
Fabrice, thank you very much. Fabrice Potier, CEO of political consultancy Rasmussen Global, my guest this morning. US Treasury Secretary Janet Yellen heads to Beijing this week, and that makes her the second member of President Biden's cabinet to visit the Chinese capital. Bloomberg's Jill DeCease joins me now. Jill, good to have you with me again this morning. So what do we know about the Treasury Secretary's visit?
Right now, Manus, this seems to be a visit that's all about continuing to try to mend ties between the U.S. and China. This is, I'll note, the second visit by a high-profile U.S. official to China in recent weeks. We saw Secretary of State Antony Blinken make his visit to China just a few weeks ago. That, of course, was a visit that was tied up and ultimately delayed for quite a while, because earlier this year, when he was originally supposed to visit, we had that alleged Chinese spy balloon incident, this balloon flying over the United States. So, you know, safe to say, tensions have been pretty high between the U.S. and China right now. And so ultimately what Janet Yellen is likely looking to do here is to try to smooth things over, you know, continue to open up these lines of communications. I'm sure from her perspective, the Treasury Department has made trying to get China a little bit more involved in debt relief involving distressed developing nations. But you know, on the other hand, there's probably going to be that sort of that issue with continuing simmering tensions between the U.S. and China that's going to factor into her visit. Of course, we've seen over the last year or so increasing sanctions that the U.S. has implied on China. We've seen them, Washington try to cut Beijing off from critical technologies involving the U.S. and other Western nations. Beijing is probably going to want to pressure on that a little bit, but at least from a U.S. perspective, it's really just about how to keep open these lines of communication between the world's two largest economies.
Yeah, and of course, as we head towards this election in the United States of America, it's about having something to bring to the electorate, which is pro-growth and de-escalation rather than antagonism. Now, when it comes to policy response mechanism, we're all eyes down on the PBOC for the rest of the year and what they do. But inherent in that is going to be the appointment of a new chief at the PBOC. And we got a glimmer of that over the weekend. What do we know? Who is he? Why do we care?
We did, yes, Manus. So ultimately what we saw this weekend is Pan Gongsheng, who is a deputy governor at the PBOC, has been appointed party secretary. We're actually thinking that this may put him in line to become the new PBOC governor, succeeding Yi Gang, who was appointed to another term just a few months ago, but ultimately is past the retirement age for officials at that level in China. And so he wasn't really ever expected to stick around for very long. What we know about this new party secretary or party chief is that he's a technocrat. He's been at the PBOC as a deputy governor in other roles for a while. He's worked at some state banks before. This is somebody who really sort of signals that idea of continuity rather than radical change at the PBOC, which is likely very important for China right now, because remember, we're still dealing with some contentious issues over the slowing economic recovery. The PBOC just cut a key policy rate not too long ago. There's been a lot of interest in whether or not those continuing rate cuts are going to happen over the course of the rest of this year, what monetary easing looks like in China as they try to navigate the slowing recovery and try to rebuild momentum. That's a big part of it. And then, of course, also there's all highs, I think, right now on the yuan. So we're ultimately going to have to see how he measures with the downward pressure there.
Yeah, it's an interesting move. Let's see what intervention comes to bear on the crosses there on the yuan. Jill, thank you very much. Jill DeCease joining me on the very latest for the PBOC. And, of course, Yellen's trip to China. Coming up, Yevgeny Prigozhin's move to Belarus has Poland on high alert. We get the latest on Russia and the Wagner leader right here on Bloomberg.
race relations in the United States are much better than when you were growing up in Mississippi, or do you think we've made less progress than you think we should have made?
Both. I think they're much better than when I was growing up. There's so many people who occupy areas and I never thought I would see them in. But I would have hoped it would be better. It's been a lot of progress, and somehow we're in an era now where, in spite of the progress, race relations in certain areas has become very scary. You know, some of the things that one reads about now remind me of growing up in Mississippi.
A week after the aborted mutiny by the Wagner Group, there is still little clarity about operations of the mercenaries and the whereabouts of the leader. Poland, meanwhile, says it will deploy forces to its border with Belarus, citing security concerns. For more, let's bring in Maria Tadeo. Maria, good to see you. So, first of all, what do we know about where the leader of the Wagner Group is at the moment? Is he in Belarus? What's he preparing to do? Good morning.
Well, Manis, if you believe Alexander Lukashenko, and some will say that is a huge leap of faith, he is in Belarus and he should be in Minsk. But the reality is we have not seen any footage or any pictures of Prigozhin ever since he said he would move to Belarus as part of a deal. Again, a lot of the details of that deal continue to be very murky. And the last time we heard from Prigozhin was a voice note. Remember, it was 11 minutes long, and he repeated, "I never intended to topple the Russian government." This was not about toppling the Russian authorities. And separately, which to me is probably a more pressing and also more important question, is what happens with Wagner. Because remember, Vladimir Putin gave them three choices. They could either join the Russian army, which, by the way, paid their salaries according to the Kremlin for a year, or essentially go home or exile in Belarus. At this point, it's unclear how many members of Wagner have actually joined the Russian army. And of course, the war in Ukraine continues.
And the question will be, if they are not part of the movement with the Russian army, just how weakened is that push forward? Now, look, Maria, the other side of this entire conversation is about Poland, perhaps the most contentious border of all. They are said to be deploying more forces to the border. These are anti-terror units. What should I draw from that missive?
Well, Manos, two things. Yesterday, by the way, confirmation from the Polish Interior Minister that they will indeed deploy, as you say, another 500 forces, including counterterrorism. They say a lot of this has to do with Prigozhin maybe or maybe not operating out of Belarus. And remember, they share a big land border, and we have seen tensions flare up between Belarus and Poland in the past. Remember, about 2 years ago, Poland accused Lukashenko of sending thousands of illegal immigrants to create tensions at the border. The other issue, and one of our viewers, again, I think our viewers are very smart, also spotted this, has to do with the politics. Poland will hold an election this year. We still don't know the exact date. But of course, for the Polish government, this is about presenting themselves as being tough on Russia, being tough on Belarus, and of course also being tough on migration.
Yep, some pretty strong messages to take to the election. Maria, thank you very much. Maria Tadeo in Brussels. Coming up in the show, from Adidas to Alphabet to Vinci, we take a look at the 10 companies that you need to watch for the third quarter right here on Bloomberg.
don't think we can replicate Tesla. Tesla is a unique because when they founded, and then the personality behind it, the product is beautiful, technologically very, very strong. So in many areas, Tesla is Tesla, but Xpeng is Xpeng. We want to focus on what we think is important for our customers. Our customer like beautifully designed vehicles, either it's large SUV or sports sedan. We believe we have a very, very appealing family look that our customers is really attracted to. They like to have user-friendly features inside the cabin that has a technology feel. It's very smart. It enables them to really utilize the vehicle that's different.
Studios in New York and San Francisco. Our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West. Only on Bloomberg Television, your global business authority. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
That's a question I get all night.
Bloomberg, top experts, great questions.
The conversations that matter, the insights that you need, it's right here on The Pulse. I'm Menace Cranny in Dubai. It's going to be a pretty spectacular week for bonds, even though it is the 4th of July and a lot of people are already left to the Hamptons. Yields rise ever so slightly. You have, of course, the former New York lead at the Fed talking about 4.5% being a reasonable level. This is, of course, Bill Dudley. 4.5% is a reasonable conservative estimate for where the bond market will go in yields. I had Standard Chartered in the seat beside me this morning saying 3.3% by the end of the year. You're going to get the jobs report at the end of the week. You're going to shudder around the hourly average earnings. And of course, you're going to get the validation for the pause in the minutes on Wednesday night. So there's a lot to play for. So from spectacular moves in the bond market, and by the way, PIMCO does prefer a hard landing. Maybe that will give you a reason to be long duration at this juncture, to Wimbledon. There are many things that one misses from the United Kingdom, and Wimbledon is one of them. Centre Court is where we kick off today, and we're going to see Kachin versus Djokovic play on the centre court. Got to say, it's the best day to go to Wimbledon. You see last year's winners on Central Court, and a jolly nice lunch I've had under court number 1. Oh, those halcyon days in SW19. And we'll be looking at the strawberry index as we go along. So it's a big week for data, it's a big week for strawberries and tennis, but also corporate turnarounds. How do you bridge that gap? AI opportunities on Bloomberg. That's what we're going to talk about. We've got Bloomberg Intelligence. They have 10 that you need to focus on. You need to watch out for this third quarter. We brought in Tim Craighead. He joins me now with the very latest. So we can't find any strawberry companies in the top 10, I'm sure. But talk to me about what, well, the consumer could be king in the third quarter. Fill or kill for the consumer. What are you going to fill your boots with in the third quarter, Tim? Good morning.
Hey, how you doing, Menace? Let me give you some context around this list of 10 ideas. We have our focus ideas within Bloomberg Intelligence, and these are companies where we have a strong fundamental view that's differentiated from the market's belief. And importantly, we also see catalysts ahead that can bring the market around to our point of view. And, you know, those 3 pillars give us ideas that might span 6, 12, 18 months. The 10 on this list that you see all have catalysts coming up in the third quarter, which makes them particularly timely from the standpoint of developments, especially in a world where we've got all sorts of craziness that you've correctly outlined, creating volatility.
Yeah, and we are seeing sort of the small movements, I'd say, in vol around the market from bond to equity market volatility. So tell me some of the big ideas that you've mentioned in terms of AI. I mean, we're all talking about it. We're trying to understand how you want to be long, vicariously, or directly, and the energy transition as we go to COP28.
Yeah, so there are a few themes that I think you can pull out of this list. One of them, correctly, as you said, is AI. Generative AI is seen as a risk to Google's search business. We, however, would argue it's a positive for its broader cloud business. And there's also positive dynamics happening with YouTube along the side. We think all of this should drive better than expected results coming up as they release numbers later in July. So that would be one. Another, you mentioned energy transition. Vinci is one of the world's largest engineering and construction companies. And you know, the spending that is going on for this secular theme out of Europe, out of the US, play right into you know, its main business. It also does, as I'm sure you're aware, own Gatwick within its airline, airport concessions. And certainly travel is picking up, and that's a good story there. So a couple of themes.
I can absolutely verify that travel is picking up. Not one plane have I been on, and I've been on many in the past 3 weeks, was empty. In all classes of travel, I should add. Tim, we're going to leave it there. We look forward to the report. And the third quarter, I've never met a wealthy pessimist, is what one fund manager said to me when he came in here recently. He met me. We'll leave you with that thought. BI Go on your Bloomberg terminal. Quick snapshot of risk as we go into this 4th of July holiday. Do you want to be long with impunity into the second half of the year? $5 trillion was added to the NASDAQ index in the first half. You got away with immunity. Can you trade with impunity? We're blowing through the levels of the year-end estimates. Stocks are bid as we go to market this Monday morning.
That go wrong and smoothing out bumps in the road is what customers expect from energy providers. And for Duke's renewable assets, that process is overseen from one room in an office building in Charlotte, North Carolina. Brian Savoy showed me around the company's Renewable Control Center.
This is where our operators are monitoring and managing over 5,000 megawatts of renewables across the United States.
How would this differ from like a conventional asset monitoring center?
Yeah, so assets, historically, they would have the monitoring center on site. So you might have an operator with screens, but at the site. Whereas this, we could do 90 sites. There's offshore wind, onshore wind, solar, and they're looking for the smallest change in output because every megawatt hour is money. When one of these assets isn't producing full capacity, we're putting another resource on, and we're having to toggle this on a consistent basis. And this, as clouds come, this is by the minute. This is not, or the hour it's off. No, it's by the minute, and it'll fall, come back, and we have assets that follow this digitally as well, so that we can keep a consistent flow of electrons on the grid.
News breaks. No one covers the world like Bloomberg.
The image image of Vladimir Putin as the all-powerful leader has been rattled already.
History was made here at the federal courthouse in Miami when Donald Trump became the first ever former president to ever be arraigned on federal charges.
We're going to need a new engine technology, and that's where the real battle lies. And whoever makes that decision first is going to have a huge impact on this industry.
Bloomberg, your global business authority. This is Bloomberg Surveillance Early Edition with Danny Berger and Kriti Gupta.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong. Our top stories today. Global stocks kick off the second half of the year with gains, but some investors warn that chasing the rally from here is a risky move. Janet Yellen heads to China. The U.S. Treasury Secretary will travel to Beijing this week, becoming the second member of Joe Biden's cabinet to head to the Chinese capital in recent weeks. Charging ahead, Tesla and China's BYD set fresh quarterly sales records on surging demand for electric vehicles. Welcome to Bloomberg Surveillance Early Edition. I'm Danny Berger in London. Kriti Gupta is in New York. Kriti, it's the start of a new quarter with U.S. equities at a high for the year. There does seem to be a fair bit of unease with that fact.
There is and there isn't. What's interesting is if you are starting to see already at just 5 a.m. in the morning New York time, a little bit of divergence when you look at the benchmarks on the equity front. For example, futures kind of unchanged, perhaps showing a little bit of caution, but then you kind of go to those large cap, heavy tech stocks really showing up in the NASDAQ, and that's where you see your outperformance, which really tells you already right off the bat. So there are some fundamentals driving it because a good chunk of those gains are likely coming from Tesla, the overnight trade. We're going to dive into that story in a second. What you need to know on the macro front is that NASDAQ futures are higher by about 0.3%. What's interesting to me, though, is that yields are higher as well. So you are seeing some repricing in the bond market. 4.93 on that two-year yield. We're getting closer and closer to 5%. What does that say about the terminal rate that the market is pricing in for the Federal Reserve on this side of the Atlantic? Higher by about 4 basis points. I'm going to get that right. 4.93, like I said, on the front end of the curve. You go further out into the curve, and you are still seeing that same amount of volatility. So really interesting bond market dynamic, even the day before a U.S. holiday. What's interesting to me is the currency story as well, because it's not just the Federal Reserve at play, it's the BOJ as well. And what's interesting is that even though the BOJ has time and time again said, you know, we're going to kind of stick to our yield curve control policy, not great news for the Japanese yen, which is why you're seeing dollar yen at about 144.75, some weakness there on the yen side. But what's interesting is that there is an incentive now for a lot of folks to hop into Japanese bonds. That is going to be a hedging trade that's very much at play, really spurred by the weakness you are seeing in the yen. Sticking with that Asia story, I want to talk about China because overnight we did get some weaker data. Yet, Danny, copper, which is kind of our bellwether for China, higher by about 0.3%. What does that tell you about risk sentiment going into the U.S. session?
Well, I'll tell you what, Chinese consumers certainly buying EVs. All right, over here in Europe, we're still buying stocks. We're buying cyclical stocks too. The best performing sectors are things like energy, basic resources, but just looking across the map, outperformers, FTSE MIB, that's also going to be cyclical. You have a lot of Italian banks who make up that index. UK stocks, FTSE 100, up about 1/3%. So to start this quarter, to start the second half of the year, European equities, the cash trade about 2 hours underway at this moment. We are indeed heading higher. Currencies, though, perhaps reflecting some of the weaker final PMI readings we've gotten in. We've had manufacturing readings for the first point. A lot of them are contractionary. Europe disappoints. France outperforms a bit, but again, we are in contraction. It is all about what is the strongest economy. What is the least dirty shirt? Perhaps that is the dollar today. It's not just stronger against the yen. It's strong against the euro. It's stronger against the pound. Sterling, cable rate, that's down about 0.2%. We continue to weaken, despite the fact that the first half of the year, the best performing G10 currency versus the dollar was sterling. Is that going to hold up this half as we have growth concerns rippling across the UK? And look, there's no catalyst necessarily for higher front-end yields in the UK in this gilt market, That's definitely what we're getting. A lack of news maybe means that you just continue this trade that we've seen, and that is front-end sell it. We're up about 4 basis points. 5.3% is where we stand on the front end of this UK yield curve. Critty.
Yeah, it feels like a lot of the market is really driven by the monetary policy, surprise, surprise. But at what extent, or to what extent, does that transition to some of the geopolitics, which brings us to one of the major stories this week. U.S. Treasury Secretary Janet Yellen looking to travel to China this week as the world's 2 largest economies look to mend ties after bilateral tensions. She spoke about her expectations last week.
We really welcome and want to have a healthy economic relationship, and we think it's generally beneficial. We have disagreements. My hope in traveling to China is to reestablish contact. There are a new group of leaders. We need to get to know one another.
And joining us now is Bloomberg China economy and government editor Jill Desis. Jill, what do we know about the secretary's visit? We know it's been on the agenda for a little bit. We also know that it's following on the heels of State Secretary Anthony Blinken. What can we actually get, perhaps, from this 3-day visit?
Yes, exactly. Well, I think that at this point, Yellen has been talking about wanting to visit China for quite a while now. This is finally her chance to do so. I think at this point, it's really about mending ties between the U.S. and China, or at least finding some way to keep open methods of cooperation and coordination. Really, this is a very, very tense relationship, as we all know. It has sometimes felt like it's just become even more tense in recent months. We've seen sanctions being involved. We've seen measures by Washington to try to cut off China from critical forms of technology. All of that is probably going to factor into this visit. I'm sure at this point Beijing is going to want to try to push back on some of those measures that the U.S. is taking against China. That'll probably factor into her visit. From the Treasury Department side, they're also going to want to try to push China a little bit more on providing debt relief for distressed developing nations. That's been a really, really key focus of the Treasury Department in recent months. But really, again, as you mentioned, this is just coming off the back of the Anthony Blinken visit, Secretary of State to China very recently. That visit seemed like it was at least moderately successful in terms of keeping those lines of communication open. And ultimately, what we're looking to see is something that paves the way for an eventual Xi-Biden meeting later this year. That's something that Joe Biden has talked about wanting to accomplish at some point. And so this visit by Yellen kind of helps pave the way for that potential meeting later this year.
Elsewhere in China, we also had a shakeup of the PBOC, a new PBOC party chief. What can we read into this appointment, Jill?
Right, so this party chief appointment, Pan Gongsheng, what we're ultimately expecting is this possibly puts him in line to become the next PBOC governor. That's not a huge surprise, seeing as Yi Gan, the current governor, he was reappointed to this position just a few months ago, but he's already passed the retirement age that you would expect for a Chinese official at this level. So really, we were waiting to see what the next level of shakeup would be. This doesn't seem to be any, like it's signaling any kind of a big, giant change for the PBOC. Really, it's more about continuity than anything else. Pan is a pretty long-time technocrat within China. He's well known by the international community as well. He's had some overseas appointments working at Harvard and Cambridge, and then he also just has been at the PBOC for quite a while. So I think we can probably expect policy to continue, which is as it has been, which is important because remember, we've got a lot of downward pressure on the yuan right now, which I think is going to kind of put the PBOC's role in maintaining that in focus. And then also, of course, this slowing economic recovery momentum that we've seen in China. What does monetary policy easing look like in China going forward? All of that is going to be what we're looking to see how the PBOC adjusts in terms of big challenges going forward.
Jill, thank you very much. That is Bloomberg's Jill Desis. Now on to the Tesla story. They delivered a record number of cars in the second quarter, up 83% from a year ago. The EV maker has vowed to push for more volume, even at the expense of profit margin. Joining us now is Bloomberg Quick Take's Alex Webb. So Alex, if these numbers are coming in at a record delivery, is it success then when it comes to the strategy of cutting costs, upping volume?
So it is as it pertains to that strategy. The thing you've got to look a little bit further back at is what prompted the strategy. And of course, Tesla added something in the order of 1 million cars worth of capacity with new plants in Shanghai, Berlin, and Texas, just at the time that demand was starting to slacken. And so what they've done is they've introduced a whole bunch of discounts and just generally price cuts, that has helped increase demand, but it has come at the cost of margin. If you look at Tesla's net margin last year, it was in the order of 15 to 18%, depending on the quarter. For the 2023, the market's expecting a 12% net margin. So it is clearly coming at some sort of cost.
And also, I think that positive kind of delivery record announcement also fueling some of the NASDAQ move this morning, at least in the futures trading. A similar story when it comes to Apple, at least traditionally, but perhaps this time giving investors a little bit of pause. What do we know about what Apple is going to do with their new virtual reality headset?
So the FT has an interesting story this morning, overnight, saying that Apple is cutting its production expectations and ordering fewer components from some of its suppliers. Now, we should take this with a certain pinch of salt because, firstly, all the numbers that we've had on what Apple's production expectations were have come from sources. Bloomberg has been amongst that, expecting about 300,000 units in the first year. If it doesn't hit that number, it looks like, according to the FT, it's because of supply issues pertaining to the micro OLED displays. Those are the things inside the headset, sitting in front of your eyes. They have some yield issues. They're not able to produce as many coming off the production line as they would like that meet their standards. Now, Apple's had this sort of issue before, for instance, with Face ID. The camera system in that didn't have the yields that they wanted. That pushed back the supply a little bit. Notice with this one, though, they were already going for quite a low number that they were expecting to sell next year. That gives them some wiggle room to fix any supply issues before they really think about scaling this into the millions of units, as many expect them to do.
Well, bringing things back to Elon Musk, as we unfortunately seem to do very often, a lot of people over the weekend, I myself included, got a message on their Twitter timeline saying what your rate limit, your tweet limit was maximized. Elon Musk follows up with he's limiting things. I know that we don't want to speculate too much exactly what's happening, but just what does this mean in general for Twitter as we continue to assess the direction with Musk at the helm?
He's in a business at the moment where he's trying to bring advertisers back, and the thing advertisers like is engagement, i.e. spending more time on these platforms. It gives you a greater opportunity to put ads in front of the users. If he's having to cap the amount of time or amount of tweets that people can see, I'm a pretty heavy user. I tend to have Twitter open all day. I've not yet encountered, still only early in the morning, certainly in the US, I've not yet encountered that break, but it does make it harder to sell ads. The other side of it is costs. Is there an issue here where if they are getting, as Elon Musk states, that they're getting lots of scraping happening from AI algorithms or AI training algorithms, then that adds to their server costs. So they've presumably had to make a cost-benefit analysis here of, are the costs too high on the server end, or do we need to be serving people these tweets in order to get ad revenue? And they've presumably gone for the first part.
Right. Yeah, a lot to digest from Tesla to Apple to Twitter. Bloomberg's Quick Takes, Alex Webb, all over those stories. We go from the tech story to what's happening in France. Protests there continuing for a fifth night over the police killing of a teenager. Some 45,000 police were deployed in an effort to contain clashes that left hundreds of public buildings and shops damaged or ransacked. For more, we're joined now by Bloomberg's Caroline Conan in Paris. Caroline, talk us through this fifth night of protests. What are we seeing? What is the reaction from the government?
It seems like the peak of these riots in France may have passed. We only saw about 150 arrests last night compared to, for example, 1,300 on Friday and 700 on Saturday. So it seems like this presence of 45,000 police officers every night to protect those servers, to protect the public buildings across France is somehow making things a little bit quieter. Also, we've had calls from the grandmother of Nahel, this teenager who was killed by a police officer last week, a call to end this violence, also calls from the soccer player Kylian Mbappe, who's very popular among this young crowd because the rioters are often very young, between the age of 14 and 18 years old. They also come usually from those so-called banlieues, these low-income, undereducated, underemployed families in the suburbs of Paris, but not only, also the suburbs of other big cities such as Marseille, where we saw also a lot of riots over the weekend. So we'll see if this situation de-escalates over the next few days.
Caroline, as we take a step back and look at how this situation evolves, what about the economic cost? How much will this end up costing?
At the moment, the finance ministry is estimating that the damages to the public buildings will cost a minimum of 100 million euros, but of course this number is likely to rise if the riots continue over the next few days. President Macron has held crisis meetings after crisis meetings over the past week. Today is meeting with the presidents of the National Assembly and the Senate, and tomorrow he's invited more than 200 mayors of all these cities that have been targeted by the riots over the past few days. So we'll see also whether there is some kind of plan of action for the suburbs to really try and deal with the deep issues that these young people are facing and their integration into the French society.
Caroline, thank you very much for that update. That is Bloomberg's Caroline Conan in Paris. Now, coming up on the show, Poland increases security at its border with Belarus amid lack of clarity on the Wagner leader's whereabouts. We're going to get the latest next. And we're going to be speaking to Anika Trion. Van Lanschot Kempen, chief economist, will join us in the next hour. A lot to discuss, including a spike in oil prices happening just in the past few moments. Saudi will be extending voluntary cuts of 1 million barrels a day through August. That headline just coming through. You can see the immediate price reaction. Oil is higher, as are concerns about the economy. The other superlative to alert you of, yield curve is inverting even further. It's just hit its most inverted level since 1981. This is Bloomberg.
What's the best investment advice you've ever been given by anybody?
The compound interest, the compounding of returns is an incredible miracle of business, finance, and human existence. Everything you learn is additive every day, and if you keep at it and don't quit, it's an incredible miracle. And it's not just interest. It was always said about compound interest returns, compound business returns, compound human returns. They're all very additive because you learn every day. And if you keep at it, it's very, very helpful.
In your observation of investors, what do you think is the biggest mistake that average investors make?
Selling at the wrong time.
And they sell when the prices go down?
Yes. Or yes. Not keeping, look, people have conviction, or they invest for if they invest for the right reasons, just keep at it.
Lots happening on Wall Street.
There are so many factors at play today.
It remains tight in certain parts of the economy.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Crisis is too strong a word, and words like that get used a lot.
From businesses most influential and instrumental.
America's economy needs a diversity of institutions.
That's something that Wall Street pays a lot of attention to.
Bloomberg Wall Street Week, live tonight with replays all weekend on Bloomberg Television and Radio.
This is Bloomberg Surveillance Early Edition. I'm Preeti Gupta in New York with Danny Berger in London. Now, a week after an aborted mutiny from the Wagner Group to Moscow, there is still little clarity about the operations of the mercenary group and the whereabouts of its former head, Yevgeny Prigozhin. For more, we go to Bloomberg's Maria Tadeo in Brussels. First of all, Maria, do we know where Prigozhin is?
Well, if you listen to the words of Alexander Lukashenko, and this is a huge leap of faith, obviously, he is in Belarus and he is in Minsk. But the issue here is that we have not really seen any footage or any pictures of Prigozhin to confirm that information. And the last time we actually heard from Prigozhin was a voice note. Remember, it was 11 minutes long, and he repeated the main message here is that he did not want to topple the Russian government, that he did not want to go against the Russian authorities. Beyond the man himself is what happens with Wagner itself as an institution. And remember, Vladimir Putin gave them three choices. He said you either join the Russian army, and according to the Kremlin, they were being paid already by the Russian MOD for a year. They paid their salaries, or you could go home or exile and head to Belarus. At this point, it really is unclear how many Wagner fighters have joined the Russian army. But of course, we know that the war continues, and this number could be critical in terms of how the operation in Ukraine is going on.
There also seems to be this fear in Poland of what the fallout from this might mean for them. They've deployed forces. That includes anti-terror units. Maria, what exactly is happening? Why is there this concern from Poland?
Yes, and of course, again, this is a neighbor to Belarus. In fact, they share a big land border, the Polish and Belarus. And we had a statement yesterday from the Interior Minister of Poland saying that they will deploy and relocate 500 officers to the border. That is additional personnel to the border in response to what they believe is now an increased security risk for the country because of Prigozhin and because of this idea that Wagner fighters could join him and actually head to Belarus. We should also note this is not the first time we've seen real tensions break out between Belarus and Poland. Remember, about 2 years ago, Poland accused Lukashenko of sending thousands of illegal immigrants to the border to create tensions, and that led to a week of turmoil. Beyond that, we should also note that this year there is an election in Poland. We don't have a date for it yet, but for the Polish government, this is also about presenting itself as being tough on Russia, tough on Belarus, and of course, any migration that may stem from it.
Maria, thank you very much. That is Bloomberg's Maria Tadeo in Brussels. Coming up, major U.S. banks raise their dividends following the Fed's stress test. We'll have more on that for you next. This is Bloomberg.
Covering the biggest challenges facing the UK government, economy, financial services and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
For the first, call it 18 years at Chipotle, this was you come into Chipotle along the line, you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1,
right.
So it's ready right when you pull up your car.
How do you manage these kind of two different staffing needs, right?
Yes.
And making sure you have the right amount of people
yes.
at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly. With just a couple people, Our average restaurant now does about over $1 million per restaurant in digital sales.
Welcome back to Bloomberg Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets, trying to open.
This is Bloomberg Technology. Welcome to Balance of Power. This is Bloomberg.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Climate is one thing that connects everybody across the globe. And if we don't do something about it, it brings down the value of all companies.
This is Bloomberg Surveillance Early Edition. I'm Danny Berger in London. Kriti Gupta is in New York. Now on to some banking and finance corporate stories that caught our attention today. Barclays is seeking to end its corporate relationship, its banking relationship, that is, with OD Asset Management. According to the Financial Times, the hedge fund has been battling to contain investor exodus after a June 8th article by the newspaper that alleged that founder Crispin Odey mistreated women over a 25-year period. Now, elsewhere, the FT is also reporting that UBS plans to make clear its rescue of Credit Suisse won't reply on funding from Swiss taxpayers as a political backlash against the deal bids ahead of national elections. Separately, a Swiss newspaper is also reporting that UBS isn't planning to take Credit Suisse's domestic unit public. Kriti, I can't help but think these two stories are related. We're holding on to the public unit, and we're not going to be using taxpayer money.
I mean, it's a pretty good turnaround, I would say, from what we were expecting initially with the takeover, which is simply that they would gut the company. So to be able to kind of withstand all of this is, I would say, a pretty impressive scorecard here.
Yeah, fair enough, although a fair amount of folks from Credit Suisse will no longer be working at the combined firm. Hey, Kriti, we're also tracking U.S. banks, too, because J.P. Morgan, Wells Fargo, Morgan Stanley, and Goldman Sachs all announced that they would have higher dividends. They led this. That's, of course, after the stress test. Of course, Kriti, we still need to find out details about capital requirements in Basel III and sort of any other fallout from the regional bank crisis.
Yeah, but this is like so typical of the banks. As soon as they get kind of that flying colors acing of those stress tests, immediately they're going to put out their dividends. It's going to boost the stock. But I think the capital requirements thing is the biggest risk. We had Shali Bassick on, our Wall Street correspondent, on the show last week, and that's kind of what she warned about. She said that reporting of where you could have a massive increase, well, that also has an effect not just on the stock, but just how much loans they're willing to give out too.
Yeah, we need the details, but we heard Powell in front of Congress saying it could be as much as 20%. So they could be facing a much steeper cap requirement. All right, coming up, Kriti and I are going to be speaking to Nika Trion, Van Lanschot Kempen chief economist. This is Bloomberg.
politics.
We're not going to be relying upon countries whose values we don't share.
To the world of business.
It's all about corporate power in the end.
Balance of Power, live from Bloomberg's Washington headquarters.
We couldn't be more excited what's in store for you.
How long will it take? How many years?
Why don't we take this one day at a time?
Good luck. Everybody has a perspective.
Every weekday at 5 p.m. Eastern Time. Join hosts Anne-Marie Hordern.
It's the one area, really, of bipartisanship.
I think we're getting more of it.
That's optimistic.
And Joe Matthew.
The debt ceiling is looming. How close are we going to get to the line before you start to worry?
Alongside Kaylee Langs.
The door was open for regulators to do more, and that puts the Fed between a rock and a hard place.
As they deliver news.
This is such an important economic issue.
He's no longer trying to run away from
that really blew some minds.
Insight.
We can both invest in law enforcement and also make sure that communities feel safe in their own skin.
And analysis.
I think your audience will get this more than most.
This is not the Republican Party that you know.
It allows him to do what he did so successfully in 2020, which is run against crazy.
From and about politics' biggest power players.
This was the zombie case, and it's now more than well alive.
That's for sure, with two more potentially to come.
I'm willing to have this battle.
It is vitally important.
This is the intersection of Washington and Wall Street.
Bringing people directly to the decision makers
right.
that impact your investments and your life.
Balance of Power, every weekday at 5 p.m. Eastern, only on Bloomberg, your global business authority. The markets count down in Europe from the financial centers of the world. Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. Global stocks kicking off the second half of the year in the green, but some investors warning that chasing the rally from here might just be a risky move. Meanwhile, Janet Yellen heads to China. The U.S. Treasury Secretary will travel to Beijing this week, becoming the second member of Joe Biden's cabinet to head to the Chinese capital in recent weeks. And charging ahead, Tesla and China's BYD set fresh quarterly sales records on surging demand for electric vehicles. I'm Kriti Gupta in New York with Danny Berger in London. Danny, it feels like out of all the headlines, all the geopolitics, all of the monetary policy story, it feels like the EV story might just be what's driving markets, at least in today's session.
Yeah, it certainly drove it in the Asia session. We saw all those Asia EV car makers really outperform. Maybe you can read into the eco story of that too. They're still willing to buy cars, although maybe it's Tesla, which is more discounted. Maybe not hugely fitting into the European session, but we are looking at a lot more of those cyclical type stocks outperforming. Euro Stock 600 up 0.2%. It's things like basic resources, energy. That's what's doing well. I know you're going to get to the oil story in just a moment, Kriti. Meanwhile, though, when it comes to currencies, most of these European currencies are having a hard time finding any strength versus the dollar. Both sterling, both the euro are weaker versus the dollar. Sterling especially so. Maybe this is starting to fade that strength in the first half of the year. The pound was the best performing G10 currency for the first half versus the dollar. Surprising considering what's happening on the economy. And Creed, this is also reflecting what's going on in the US. We do see yields on the front end continue to march higher. Same thing happening in the UK, 5.3%. That is a gain of 3 basis points for 2-year gilt yields.
Certainly a lot to digest in the FX space and the bond space. So maybe that's where I start as well, Danny. Simply with perhaps what we saw in the Asian session, continued weakness in the Japanese yen, even though we did get perhaps weakness in other parts of Asia as well. It is Japan's currency that got the brunt of the hit, pushing the dollar alongside the euro, as you pointed out, 144.65 on that currency pair. Remember, there is some bond hedging at play here because the weaker the Japanese yen gets, the more attractive Japanese bonds get in terms of a hedging perspective. So really keep an eye on that interesting dynamic. Again, bringing it back to the U.S. bond story, 2-year yield at 4.92, higher by about 3 basis points. We're inching closer and closer to 5% on the front end of the curve. Remember, that was what the terminal rate the market was projecting. I wonder how that changes as, again, we get closer and closer to that 5% technical level, and whether or not it actually even stays there or even surpasses, bringing us to, again, what we're seeing in the stock market. We talked about this, Danny, when it comes to kind of the EV story. A lot of it is coming out of China. Remember, China is the leader in electrification globally still, despite Tesla trying to expand globally and other EV makers kind of entering the fold. Nevertheless, it's giving a little bit of a tailwind to NASDAQ futures higher by 0.2%, really outperforming what you're you're seeing in S&P and Russell futures. I think the story of the last 15 minutes or so, though, comes to the commodity space. Oil in particular, looking at Brent crude higher by 1%, trading with a 76 handle over two headlines. The first, Saudi Arabia extending their voluntary cut of 1 million barrels per day through August. That was that initial spike that you saw right here. Pairing it a little bit, now ticking higher again on a second headline that Russia is also going to be voluntarily cutting oil exports by about 500,000 barrels a day in August, something that the energy minister, Novak, said was something that they're doing to stabilize the oil market. Nevertheless, the combo of that putting oil at about a 76 handle, Danny.
And of course, we're going to have some OPEC meetings throughout the week, so interesting to see that ahead of it. Kruti, it's worth taking a pause, taking a beat, and wishing maybe an unhappy birthday to the yield curve. Nearly 1 year ago exactly, the yield curve inverted, and it has stayed there ever since. Here's the strange thing, though. We were all dour about the economy, but over the past year, over the past month, to be more specific, we've had some really strong economic data. In fact, the Bloomberg Economic Surprise Index is at its highest since 2021. In other words, the economic data has been beating expectations from analysts by the most since 2 years ago. So what is right? Is it the economic data, the surprise, or is it this bond market? Let's bring in now Anika Trion, chief economist at Van Lanschot Kempen. Anika, is the bond market too pessimistic, or is that inverted yield curve just showing that, yes, at some point, we will indeed be getting a recession?
Hi, Danny. Well, it's the question everybody is asking. Are equities market right, or are bond markets right? And history normally tells us that bond markets are leading and we should follow there. I think that there's two complicated factors. One of them is the divergence between monetary policy and fiscal policy. So while all central bankers across the world are becoming more and more stubbornly hawkish, fiscal policy is, reaching record amounts of stimulus that's being granted across the board. That's one. And I think the second thing is, because central banks were too late to deal with inflation, inflation has become embedded in the services sector. Labor markets are very, very strong, and that's a massive supporter for the economy.
So I translate that for me into your economic call then. Are we still going to get a recession in the U.S.?
Well, I think it all hinges upon one thing, which is, and it's not only the U.S., I think it's broader. Are central banks going to stick to their 2% inflation target? And are they going to behave accordingly? And it's all about this. And that's perhaps why the Fed even introduced a pause in the first place, also being very data dependent. If central banks acknowledge the fact that we are in a structurally higher inflationary environment, also thanks to the fiscal policy, also thanks to rewiring of global supply chains, the effect of Russia, Ukraine, etc. If that's the case, then central banks can actually take a step back and not feel the urgency to crush services inflation, which is actually, as I said, the labor market's been very supportive. If central banks remain very dogmatic about the 2%, in order to restore credibility, they're going to simply keep having to go on. And if they keep going on and keep raising rates, that could indeed trigger the recession that, we've all been talking about since September, October of last year.
Yeah, I would argue perhaps even longer, depending on just how bearish you are. Anika, talk to us a little bit about perhaps the payrolls report that we're going to be talking about on Friday. If you're talking about recession, perhaps one of the first indicators that we're headed there is softness in the labor market. What are you expecting on Friday?
Yeah, so that, the biggest surprise thus far, well, there's been a few surprises, as you've also shown in the surprise index, but one of the biggest surprises is the strength of the labor market. It's been rock solid. And we've all been looking at these indicators at the cuff, which shows the slight weakenings, especially if you look at, layoffs, etc. So again, in these payroll data, we will be looking at it. And I guess everybody will be doing the maths, which is to what extent are wages growing nominally, and what is happening to core inflation, because obviously inflation is starting to come down, but the sticky part is core. And if we get to a point that wages are growing, real wages are growing faster, so wages are growing faster than your core inflation, that's obviously a continuing supporting factor for the economy. So that's what everybody will be looking for.
So Anika, that's the kind of broader story. When you look deep within the numbers, we're looking at average hourly earnings that aren't necessarily improving when you look at real wages. We're also looking at productivity numbers that have been dropping, I want to say, for several months, if not a year now. Talk to us a little bit about how that compares with the AI story that is perhaps driving the equity markets to a lot of green on the screen. There is a narrative out there. I think Larry Fink over at BlackRock, the CEO there, came out and said the AI story, the acceleration you're seeing in that part of industry could actually help the deterioration you're seeing in productivity. How are you thinking about something like that?
Well, it's interesting what you say about the AI story driving equity markets, because the reason they're driving equity markets is obvious, right? Look at the share price of all those, AI beneficiaries in the market, which contributes to earnings growth, and everybody likes that, and equity markets go up. But there's one that's slightly deeper, but perhaps more interesting, which is, I've just mentioned that there are a lot of structurally inflationary forces working its way through the market, which is why many are questioning whether 2% is the right target or 3% should be the new normal. And as you mentioned, as Larry Fink has also been talking about, the one major deflationary structural force out there could be AI. Let's talk about productivity, as mentioned. AI could be the factor driving productivity growth. And obviously, if AI can really play its role in managing that, and therefore managing a more sort of healthy long-term inflation as a result of that, that's also very supportive to equity markets. The big question is, how much of AI working its way through to increasing productivity is sort of something we already, we're thinking about, which will only pan out far in the future, and how much is, actually going to move the needle in the shorter term.
Anika, I can't help but think, as you and Kriti discuss the impact of AI on jobs, as I attempt to get Kriti to ask you a question about our start and go full wonk, I can't help but thinking, how far outside the historical norms are we? Are we at a point right now, Anika, where a lot of the models we typically use to assess this economy, to some degree, they're just not working right now, considering how different this time around is?
Yeah, and it's that famous "this time is different," and it gets so complicated because it always sounds so logical and sensible to say this time is different, but in looking out in the future, you say, well, in retrospect, it wasn't. But I think the two major factors that we need to take into account in the "this time is different" rhetoric is, as mentioned, the divergence between monetary policy and fiscal policy, and this is huge. Think about the trillions of euros, dollars that are being put out by governments, be it national security, be it infrastructure needs, be it, the Inflation Reduction Act, be it climate change, spending programs. And these are hugely beneficial to the economy and to markets, to jobs. So central bankers can do what they like. They can up rates, they can make mortgage rates more expensive, credit loans, harder to come by. But that factor is huge. I think that's one. And then the other one is obviously technology. We've seen technology waves in the past, but the speed at which AI is really accelerating things is obviously quite new for us.
I love that you mentioned that divergence between monetary and fiscal, because of course that is a major conversation stateside as we get, even just last week, the Supreme Court kind of knocking down President Biden's loan forgiveness program. He's coming back and saying we're going to find alternative measures. How are you thinking about that from across the Atlantic? Is that something you're worried about, what the Biden administration is perhaps doing to help people who can't really live at a time when the Federal Reserve is saying we need to go even harder on inflation? How do you square the two?
Yeah, I mean, I guess what Biden is also referring to, but it's all about the consumer. And the one reason for why the economy is holding up much better than expected, again, you've mentioned it. Let's rewind back to September, October of last year. Had we known that the GDP numbers of Europe would only be a slight negative, we would have been over the moon. We, at that point, were predicting the darkest period for Europe in decades to come across us, given energy crisis, etc. US, we've been harping on about an aggressive story about US recession. Look at Q1 GDP growth. It's really strong. Q2 very likely to be positive again. So I think from that perspective, the consumer has played an incredibly important role. Part of it was the fact that you had these pent-up savings around the pandemic. Savings rate has fallen from pre-pandemic of 10% to 4%. There's still a runway ahead as long as consumers feel comfortable and confident. And because the headline inflation numbers are coming down, because the job markets are so strong, consumers continue to feel quite comfortable. And I think that's the point. That's what everything is hinging on.
Yeah, consumer confidence data, those surveys continue to come in strong. Hey, Anika, really great to speak with you this morning. We appreciate your time. Anika Trion there. Thanks so much. Now, coming up, stock momentum continues into the second half. We're going to take a look at 10 things to focus on in the next quarter. Our Bloomberg Intelligence team has the details next. This is Bloomberg.
London will stay a financial center. It will stay our EMEA hub. We'll just have a rebalancing onto the continent. And actually, the numbers of who has moved across aren't that big. So it's sort of in the 200 level. And if you think about 15,000 people, that's sort of not that material. And so I do think both will basically continue to grow and continue to be very relevant. What will change, though, and the big thing that's changing, is actually the risk-taking is what's going to move. And so we've historically had risk-taking in the UK. That risk-taking and the assets that go with it, not the people alone, but the assets that go with it, that's the next phase of what we're now moving into. And that will be a material change.
Can you believe it's summer already? That means it's time for the Boston Pops Fireworks Spectacular, and Bloomberg will make sure you see all the fireworks, music, and special appearances by pop superstars and Vogue, chart-topping country duo Low Cash, and film, TV, and Broadway powerhouse Mandy Gonzalez, plus the U.S. Army Field Band and the cast of the Broadway musical Ragtime. It all starts July 4th at 8 p.m. Eastern, right here on Bloomberg Television and Radio.
This is Bloomberg Surveillance Early Edition. I'm Danny Berger in London. Kriti Gupta is in New York. Now, we're officially in the second half of the year. Congratulations, you made it. And Bloomberg Intelligence has laid out 10 focus ideas to watch for the third quarter. Joining us now is the man behind it, Tim Craighead from Bloomberg Intelligence. All right, Tim, so we got 10 companies. Tell me about them.
So the basic idea, I'll take a step back, of our focus ideas are companies where we see three things going on. Number one, our analysts have a very strong fundamental call. Number two, they believe that their view is different from what the market is discounting. And number three, they see catalysts ahead that can shift the mindset. And there's about 100 of these across sectors, across regions that our analysts have on an ongoing, actively managed basis. These 10 all have catalysts that are coming up in the third quarter that we think are particularly notable.
Tim, talk to us about the AI story, but specifically as it pertains to Alphabet. And I'm so curious about this because a lot of the kind of creators of AI or the front runners of it have come out and since said, actually, this is dangerous technology. This is something that the market is far getting ahead of themselves with. How are you applying that kind of thinking or that kind of rhetoric to a company like Alphabet that has their hands in a million different things?
Yeah, no doubt. And I guess our view on this is that, you know, the focus is on NVIDIA and semiconductors, and, you know, obviously a number of stocks have gone to the moon accordingly, and that it could be bad for the basic search business that, you know, is all about Google within Alphabet. We would argue that actually as AI continues its rapid adoption, that that's going to be really good for Alphabet's cloud business more broadly. And that is going to overwhelm any risk that there is to search. And beyond that, you know, they have YouTube, and there's a lot of interesting things going on within that business that will continue to benefit the company.
I don't want to talk about AI. I just want to talk about cheesecake. I mean, I wish it was the actual cheesecake. I wish you brought it on with us. But I see on here that the Cheesecake Factory is one of your 10 stocks. I need to know more about this. Well, what exactly are you looking at here?
Yeah. So these aren't all positive ideas. There's 6 that are constructive. There are 4 that, you know, are situations where we have concerns. And you all have been talking in the prior section about economic slowdown and risk, and, you know, is it going to happen or not, et cetera. You know, we do see with Cheesecake Factory a potential concern, and that is that in the midst of a slowing economic environment where interest rates are high, consumers are pressed, that expectations are really robust for Cheesecake's comp store sales on an ongoing basis. We think that's really far-fetched. We think that comp sales may, essentially come back down to levels pre-pandemic as opposed to double that's currently in expectation.
I feel like it should be like beer, though. If you're sad, you go drink beer. If I'm sad, I'm going to go eat a piece of cake, Tim.
There you go.
Some pretty solid logic there from Danny Berger. Who I will also point out is in the middle of London, a big kind of center for food, and she said that if there had to be one restaurant she would pick to eat her for the rest of her life, she would pick Cheesecake Factory. I'm just putting that on the record there.
Their menu is huge. You'd have so much diversity of opinion. Okay, Critty, I'm gonna stop buzz marketing Cheesecake Factory and then wrap it up here. Tim, thank you so much for joining us this morning. That's our Bloomberg Intelligence's Tim Craighead. All right, coming up, the market moving events you need to be watching this week. Critty and I have it all covered for you and the pre-market movers. This is Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He was a day trader. He taught himself, self-made day trader. Yes. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
You know, in many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, our fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is Bloomberg Surveillance Early Edition. I'm Danny Berger in London. Kriti Gupta is in New York. And let's take a look at what's ahead this week. It is a busy one despite the holiday. We're going to be getting U.S. PMI and ISM manufacturing later this morning before U.S. markets close early ahead of the 4th of July holiday. Then, overnight if you're in the U.S., but early here in the U.K. on Tuesday, we're going to get an RBA rate decision on deck. They're expected to speed up the pace of hiking yet again. Then FOMC meeting minutes come back out on Wednesday. And then on Thursday, U.S. Treasury Secretary Janet Yellen begins her trip to China. Now, finally, we're going to round out the week with U.S. payrolls data on Friday. Kriti, I know you're going to be watching this one. Props for productivity, wonky details, and all.
Well, I mean, I'm still obsessed with the fact that Larry Fink says that the AI kind of boost can potentially help or offset some of the decline we're seeing in productivity numbers. And that makes sense for a lot of the folks who are saying working from home is not a positive thing for the economy. And again, that's just one case to be made in the marketplace. But of course, I'm watching a lot of the micro as well. Pre-market stocks is where my head's at, specifically when it comes to the move you're seeing this morning in electric vehicle stocks. It's fueling a little bit of a boost in NASDAQ futures, but at the top of mind, we have to hit it. Tesla shares higher by 6% already. Look, a record number of deliveries. They really scaled up. They kind of took a hit on their margins, but it's still something. It's a strategy that was initially met with a lot of resistance, and yet they are able to kind of pull through and at the same time impress investors at the same time. Danny, this is pretty impressive, I have to say.
Yeah, right. 83% jump year over year. And I think you put it really rightly. Look, this decision of them to cut prices, prioritize volume, it had been really criticized. But here's the thing, these numbers are really strong. And part of the goal of Tesla, too, was not just to get the demand, but also deliver more vehicles, too, and not have this inventory glut, and they were able to do that. So the numbers match up that this play by Tesla, at least for now, it's been successful.
And I wonder how much some of its peers, like General Motors and Ford, which are also trying to do the same thing, kind of take a page out of Elon Musk's playbook and do a similar story. I said, Danny, that the Tesla story was going to fuel NASDAQ futures. Well, perhaps a counterforce to that is what you're seeing in Apple. The FT reporting that they are cutting their Vision Pro goals after some production issues. That is the virtual reality set that they had kind of boasted a few weeks ago at their, I don't know what it's called, their show. There's a word for it, but their Worldwide Developers Conference, that's what I'm thinking of.
Yes, that's it.
Down about 0.2%. Give me some time, eventually I'll get there. But I think the move there is interesting because, of course, Apple is also a heavyweight. It did also hit, by the way, $3 trillion in market cap last week, so perhaps seeing a little bit of a pullback then. Of course, it is kind of a weird day in the U.S. session given tomorrow is a holiday, so perhaps light volume not playing in their favor.
I almost called it a web developer palooza, but I knew palooza wasn't the correct word. Honestly, they should think of renaming it to that. This is interesting because the thing itself, look, it just looks like a pair of ski goggles, but part of the reason for this delay, according to the FT, is that these are just so complicated to make. It's a lot of tech going into this, and it's not even clear how much demand there is for this too. Google have tried in the past, perhaps unsuccessfully, but yeah, I guess we're gonna have to wait a little bit longer to see these become mainstream.
Yeah, a lot of focus on their products as well, but I have to say, you know me, I was obsessed with the antitrust story last week. Well, look, it continues on Monday as well. This time it's in the biotech space, and Danny, this is really important because Gilead Sciences is one of those key biotech stocks that a lot of people play. Well, it's taking a little bit of a hit this morning, down about 1%. They were cleared for their pay to delay HIV drug. What's important here is they were partnering with Teva Pharmaceuticals. It got pushed back from some antitrust. It looks like they've now gotten the all clear, so you have a little bit of the M&A arbitrage at play. But again, antitrust going everywhere, from big tech to biotech, it's playing into the story.
Well, Critty, as we head out to the end of the hour, I do just want to give us another check on oil. Oil rallying more than 1%. Two hotheads on your terminal. Saudi is going to be extending voluntary cuts of 1 million barrels per day, as is Russia. Less supply there. Oil spikes. This is Bloomberg.
Middle of a massive exhibition center located on the western suburbs of Shanghai, where the annual car show is taking place. This is the first exhibition after the end of the COVID lockdown. We can feel a lot of excitement on the ground. Electric vehicle is going to be the new theme of the industry. Most of the European companies and Japanese car makers who are considered latecomers to the China EV party are launching their EV products. They are making their foray. intensifying competition in the market. For example, Volkswagen yesterday debuting their ID.7, which is electric vehicle rivaling the likes of Model 3, which is one of the best-selling product in China. And Mercedes-Benz, they are announcing the launch of their new super luxury model of Maybach, which is going to be a fully fledged electric vehicle priced at $200,000 each. Domestic players are also trying to maintain their lead in the market. BYD, for instance, unveiled its first luxury model called Yangwang yesterday. It's priced at about 1 million yuan. At the same time, it's seeking to gain market share in the mass market as well. Needless to say, attracting all the car makers to the Chinese market is the rosy growth prospect. Demand is surging. By some estimates, EV sales in China are on track to exceed 8 million units this year from more than 5 million last year. The future of the car industry is EV, for sure, no question about it. This is Charlie Zhu, Bloomberg News, reporting from Shanghai Auto Show.
On the David Rubenstein Show, Peer-to-Peer Conversations, I uncover the untold stories of the world's most successful leaders. Watch Wednesdays on Bloomberg Television.
I think the global central banks are going to keep policy restrictive well into the first half of next year.
The ECB is going to hike at least twice. Bank of England is going to hike at least twice. I really hope the Fed doesn't.
Our base case is still that the Fed probably only has one more interest rate hike in their pocket.
Even Powell has got to learn to stop tightening policy at some point.
U.S. economy is really doing fine.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. Is Bloomberg Surveillance. Jonathan Farrow on a 4th of July assignment. Bramo, somewhere north, up by Tupper Lake. She and the black flies. The deer flies the size of a B-52. I'm here on July 3rd. It's a Monday, and joining me pulling the short straw, Katie Greifeld joins us after great success Thursday and Friday as well. And we got a really, really special lineup today. I just told some of the staff that this is without question the strongest holiday show I've ever done. Let me tell you a little bit about it right now. First, so Katie, it's not a boring Monday. There's a lot going on, not only in the world, but frankly in America.
Absolutely. I mean, usually these holiday shows, they are a little bit difficult, but there's definitely a lot to talk about today, especially when you consider we have the first half of the year in the books. We're looking ahead into the second half after a performance in the first half that no one really expected.
A reset with no one in the equity markets. Cameron Dawson of New Edge will join us here in moments. She'll be with us for the entire hour to explain to us why we're going to Dow 40,000 in this hour. And boy, do you get lucky with this. We booked them before. The 210 spread moments ago through 110 basis points. For Global Wall Street, this is a huge deal. Anthony Crescenzi of PIMCO will join us here at the bottom of the hour. Of course, PIMCO with that lead article from Isaacson in the FT over the weekend. This is perfectly timed. We'll talk about that recession signal here late in the hour. Katie, what do you see in the data, the zeitgeist right now?
If you look at what we can look forward to today, there actually is economic data that we're going to get to.
Really? I didn't know that.
Yeah, we do.
Really? I did not know that.
Yeah, we get U.S. manufacturing PMI at 9:45 a.m. It's not top tier, but it's something. Yeah. So we're expected to see a deceleration there. And then 15 minutes later, Tom, we get ISM manufacturing, expected to see a slight improvement. When,
it's a huge deal.
When it's July 3rd, it's definitely top tier data. And then, I don't know, that's pretty much it for today.
Well, and also we got auto sales coming out here, which has been part of the buoyant consumer and maybe the inflation part, particularly with used cars. But to go back to ISM, I never really paid much attention to ISM. And John Farrow once sat me down. He said, you got to look at ISM. And these numbers on survey are still way below 50.
Yeah, exactly.
Which is interesting to
yeah.
see.
50 being the threshold there. And I mean, it feels like in this cycle, particularly every data release, Wall Street just hangs on as we try to piece together what the heck is going to happen with the Fed's policy path. But that's what we're looking forward to today, of course. Then we look forward through the rest of the week. We do have FOMC minutes on Wednesday. This is interesting. Of course, we know what happened at June's meeting. We got a lot of data. We got the SEP. But this is interesting to me because there were no formal dissents at June's meeting. And we know there's some daylight between some of the different members on the FOMC.
You can see that with the dots.
Oh,
I mean, the
big
dots
time.
are comedy.
Yeah, so
to say the least.
to get some color on what was actually said behind closed doors, definitely something to watch. That comes out Wednesday at 2 p.m. And then let's preview it now. It's Monday, but Friday we get Jobs Day in America. We're expected to add around 225,000 jobs. Unemployment rate expected to fall slightly to 3.6%. Wage growth holds steady.
On the 4th of July, it's a fully employed America. How are we going to set this up? Sarah House to join us from Wells Fargo in the 7 o'clock hour. In the 8 o'clock hour, we are thrilled to bring you James Bianco of Chicago. The Cubs had a good weekend, so he's agreed to join us. And Ellen Zentner will join us from Morgan Stanley. And, of course, she pulled forward her rate lift to the July meeting here. So it's just a bang-up Monday here. Thrilled you're with us with Tuesday off tomorrow. We dive into the second half of 2023 on Wednesday. Joining us now, and we really start strong, is Cameron Dawson. I'm thrilled that she could join us today with New Edge Wealth. The basic idea here is futures up 2, churn, maybe the NASDAQ's up because of Tesla. I'll leave that up to you. How'd you do in the first half? I mean, 2020 hindsight. What's the Cameron Dawson score for the first half?
We've been really surprised by the degree of market strength, and the source of that market strength being multiple expansion really has what surprised us the most. We thought that earnings estimates were a little bit too high going into the year. We've certainly seen those coming down, but the degree of multiple expansion has been absolutely astounding, mostly in the context of a Fed that's still saying it's going to be tight and interest rates that still are pushing higher.
My problem with this, and you've been very responsible about it, is everybody's conflating a 6-month performance, which for the financial media is OMG, look at this, stocks went up. Here's the reality. I didn't know these numbers, folks, when I went to the Bloomberg terminal to do it this morning. Bring it up here. This is the 2-year return, 24 months, annualized. Standard & Poor's 500 is up 3.4% per year. The Dow's up a stunning 1.9% per year. And the NASDAQ lifts 3% per year. To me, that's far more germane than navel-gazing 180 days. Am I right?
I think that is a really great point, which is that part of this move is just because we got so oversold into the end of the year. And that is part of what we saw within the tech stocks mostly. Those were the stocks that were left for dead throughout the course of 2022. So as we start to see these stocks rebound, a lot of them have now rebounded past trend. And that shows you that you're starting to see some improvement in the trend. But at the end of the day, we did have an oversold condition.
Katie, what's so important here to me is our viewers and listeners basically have a long-term perspective, whether that's 6 months or 6 years. And we're all focused on 6 months right now, which don't show the single-digitness of our post-pandemic world.
I want to keep talking about the next 6 months, though, Tom, because I was reading this morning that if you look
in my place,
listen to these numbers. I was looking at the median forecast among strategists about what's going to happen to the S&P 500 by year end. So the median forecast is 4,100. We closed at 4,450 on Friday. You think about a 350-point drop. Does that seem realistic to you at this juncture?
It could be realistic if you start to see the whites of the eyes of a recession showing up. But if you continue to have earnings resiliency, then maybe that doesn't look like something that's in the cards. The thing that's interesting is that Wall Street strategists continue to be very bearish. But if you look at positioning, it's flipped to be much more bullish, which means that you have seen people chase this rally recently. People are moving to be much more overweight. So it's a question of how far we've come in that positioning. Do we get to the point yet where that alone becomes a headwind?
Well, let's talk about one of the big reasons why maybe these forecasts are still so bearish. You think about what happened in March with the banking sector. It's interesting. I was looking at it today. If you look at KRE, of course, the regional banking ETF, it dropped and then it stayed there. And even if you zoom out to the KBW index, it dropped and it's still near its March lows. Does that seem like a buying opportunity at this point?
Chris Verone over at Strategas always says, avoid the scene of the crime. And I think that typically when you see a big earnings reset happen with names, and there's a lot of uncertainty about earnings power going forward, it is understandable that you'd see things bounce along the bottom. These stocks are cheap, but I think they're still fairly in falling knife mode, meaning that you don't know the earnings certainty, you don't know the degree of regulation, you don't know the margin compression as they're having to pay to keep those deposits there. And so even though they're cheap, that cheapness may be very well warranted.
So maybe not crisis mode, but sort of the long-lasting impacts, that grind of what happened in March.
Exactly, and one of the things that continues to be a watch item is if we will see loan growth really start to come in. That senior loan officer survey is something we now all watch, but it's been flashing tightening standards for well over a year, almost 18 months now, but we still see pretty healthy loan growth. It's moderated, but it's not falling off a cliff. I think that's the big watch item in the second half.
I look at the readjust and the rebound. It's going to be really interesting to see how this plays out. But I want to talk about fear of missing out. And, you know, there's the Apple news this morning and Tesla. Alex Webb's scheduled to be with us on the Tesla unit sales. But I'm just absolutely fascinated what you are seeing at New Edge in conversation with adults in the market who are living single digit, or dare I say all cash, and they're scared to get to 1231. What will their behavior be?
There certainly will be a chase, and we're seeing that not just within equity flows, but within options activity as well.
I agree. We're seeing it in a call.
And because people weren't positioned for these kind of stocks to do well, and even with our own clients, we showed them, here's how we were really good at being defensive in 2022, and this is a great way to have that balance and stableness in the portfolio, but then you look at the big high-flying tech stocks, and they go, well, why don't we own those? And you answer, because they were down 40%
well, for the late
last year.
Harry Markowitz, dying here at 95, the Nobel laureate, let's talk about rebalancing. Everybody watching and listening knows I'm not a fan of rebalancing and selling your winners. But what do you rebale right now to get to 1231, given that you made all your money in 3 stocks in a 15-stock portfolio? Do you sell Apple?
You want to stay at least equal weight Apple. Apple is as much of a portfolio construction.
She can stay the rest of the hour. She answered that She answered that correctly. How do you sell Apple here? And you know there'll be people like you telling people, go sell NVIDIA.
Let your winners ride is usually a great answer, but of course there becomes risk when valuations get so stretched. You know, we all are talking about how fantastic these companies are. They're impenetrable. Look at the balance sheets. Look at the free cash flow. Lest we forget, they were down significantly in 2022 because they got too expensive in 2021 and ran headfirst into an interest rate wall.
I would love to go cross-asset here because looking through your notes, you bring up the fact that we have seen bankruptcy filings tick up. And this is something I've been scratching my head over. Then you look at credit spreads, both in IG and in high yield. You'd have no idea. How do you explain that dynamic? When does that actually start to make sense?
It is really bizarre that you're starting to see actual stress within pockets of credit, and yet within credit spreads, it remains really subdued. And I think it's partially because of supply and demand. There's been an absolute lack of supply of high yield credit because funding costs are high, which means that when people are looking at all-in yields of 8, 9%, they're saying, if I can ride out a little bit of volatility, I'll go ahead and buy that. And I think that's one of the things that's keeping credit spreads maybe artificially suppressed.
Did you see how Katie's channeling Bramo there? It's like, you know, Bramo's waking up in some pup tent somewhere up on the Racket River,
I'm
swatting
sitting in a
deer
chair, you know?
You're channeling Bramo here this morning. Speak to the gloom crew, Cameron Dawson, right now. They're scared stiff. They've got massive regret. What's the action plan, given the fact they're scared stiff?
The action plan is to make sure you don't stray from your long-term plan. And you can have a very negative outlook in the short run of being oversold, of thinking that you're overbought, you might need to consolidate, but that doesn't necessarily mean that you need to dip into that strategic allocation. When we think about building portfolios, we might move things tactically, make day-to-day decisions, but really we want to have the North Star of what's the allocation we need in order to make a goal. And I think that's where the Gloom crew can get you pulled off center.
You can't see Polaris with a smoke case from Quebec.
It's true.
From Canada.
No.
You can't see the damn North Star.
Limited visibility.
Are you enjoying us? Will you stay for the hour?
I would like to have you.
This is great. We're going to have some people stay with us for the hour on this very special Monday. We start incredibly strong with Cameron Dawson of New Edge. Well, Sarah Hunt, Chief Market Strategist at Alpine Saxon Woods, will be with us as well. Ellen's at in her room to darken the door in the 8 o'clock hour. We got to get her out of a trout stream. She's a fisher, so I think she was like trout fishing in the East River early this morning to get here. Katie, I look at the remorse here, and I really think it's a time to get away from the certitude of 6-month analysis to a longer-term analysis, which is really sobering for people. For a lot of people, this is subpar single-digit returns for whatever reason.
But even still, if you really do broaden out that time frame in the grand fullness of time, people say stocks always go up. Maybe it's not necessarily a bad dynamic that you have 7 stocks leading this rally.
The market speaks this morning. No holiday for the bond market. The 2-10 spread out to 110 basis points. 10-year real yield 1.62%. Stay with us on Monday. This is Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for the bank? Is this a new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a great question. I'm Francine Lacqua, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority. The moment news breaks, no one covers the world like Bloomberg.
The image of Vladimir Putin as the all-powerful leader has been rattled already. History was made here at the federal courthouse in Miami when Donald Trump became the first ever former president to ever be arraigned on federal charges.
We're going to need a new engine technology, and that's where the real battle lies. And whoever makes that decision first is going to have a huge impact on this industry.
Bloomberg, your global business authority.
Saudi Arabia has unilaterally cut production. OPEC Plus have extended their voluntary cuts. There's not much more they can do. For them, it is about providing stability to the market, provide a floor so that even when there's a lot of demand uncertainty, you still have some continued investment.
Amrita Sen of Energy Aspects, she is expert on the elasticities, the responsiveness of supply and demand of global hydrocarbons. Not something we thought we were going to speak about on a Monday morning, but there is action in the oil market in the New York 5 o'clock hour about an hour and 10 minutes ago. Saudi Arabia spoke. Russia has spoken. You wonder who else is going to speak here as we stagger to important oil meetings. Parachuting in, Will Kennedy joins us now, Senior Executive Editor for all of our hydrocarbons on very short notice. Will, did this catch your team by surprise that we saw a pop in oil from, let's call it a 69 out to Brent crude 76.05? Were you surprised?
The Saudi move was perhaps not so surprising. We knew that they'd have to make this decision in the next day or two, and I think that we talked to people on Friday who said that they expected, given where we were in the market, for them to extend by another month. I think the Russia move perhaps was a little bit more surprising. Clearly, there's been a lot of focus on Russia's compliance with their existing commitments, and for them to make an extra commitment at this stage is very interesting. I think what the market will really take from that is that the alliance between Riyadh and Moscow remains strong, that they're determined to work together to keep the oil market where they want it, and today's move and the Russian side of that was perhaps a little surprising, is good evidence of that.
Special Monday here. John Farrell off, Lisa Bramlett off, Katie Greifeld in for the two of them, and Cameron Dawson has decided to join us for the rest of the hour. She killed it so much in the A block, so we'll get Cameron in here. Here's Katie to Will Kennedy, please.
To Will Kennedy, let's talk about the price reaction, because you look at crude, it's up 0.8%. Then you cruise over to Brent, up 0.9%. Put this supply cut in context for us, because the reaction in markets hasn't been that dramatic so far this morning.
No, I think that's a fair comment, Katie. And obviously the wider context is an oil market that struggled considerably in the first 6 months of the year, I think down about just over 10% in the first half of the year. A lot of people expect the market to tighten radically in the second half of the year. I think that there's a view that global inventories will start to fall, and that there is room for oil prices to go higher than here. Demand has not been fantastic, but it's not been terrible. It is increasing. I think we're seeing a record number of people fly in the United States over this holiday period, for example. Right. But the problem has been supply. The supply has come faster than people expected from Iran, from Russia, and I think that people really want to see evidence that Russia meets the commitments it's made today, and indeed the commitments it's made already, to see that marketing tightening that people expect over the coming months.
Will Kennedy, we're going to bring in Cameron Dawson here of New Edge Wealth with a question. She said to me in the break, she goes, all I want to know is a gallon of gas going to finally go down out to my secret beach on Long Island. Will Kennedy's not up to speed on that.
No.
It's petrol and a liter, and he has no clue about a gallon of gas on Long Island. Continue.
Well, I'm curious, Will, what you think about the supply response within the U.S., because we've really seen that Baker Hughes rig count start to move lower. Do you think that supply in the U.S. could be an upside driver for oil prices in the second half of the year?
It's a really good question, and clearly the shale industry is slowing and slowing fast. But right now it is still growing, and I think that production is going to reach a new record. It's a really important question how fast it slows, where that plateau turns out to be, and how long it lasts. And I think that's going to be a critical thing to look for going forward. But it's worth saying that it's not there yet, and that we are seeing more supply out of the US, and that's part of the broader picture of a global oil market that, frankly, has been better supplied than people expected. So no definitive answer for you there, but I think it's a key part of the equation in the second half of the year.
And one of the things that we continue to scratch our head about is how much recession is already priced into oil prices today, meaning that is this demand fears or actual demand that's being weak, and what could be on the demand side a potential upside driver, given that higher oil prices could really throw a wrench in the whole decelerating inflation question?
I think that's an excellent point. I think we should talk about China and the US. I mean, in China, demand has clearly risen, but not as fast as people expected at the beginning of the year. People were very, very optimistic about how fast the reopening of the Chinese economy would add to global oil demand, supply and balances, and it hasn't been spectacular. And the industrial side of the Chinese economy clearly has struggled, and that's fed through into things like petrochemicals. So there is a demand problem there. I think in the US, to me, the demand issue is less clear-cut, and I think there is an extent to which it is probably priced in a weaker American economy than has actually emerged, so that there may be some upside potential there if we do see the kind of soft landing that other markets are pointing to.
And so if you add that all together and you think about what was expected maybe a few months ago, I remember it was the likes of Goldman Sachs and Morgan Stanley, I believe, calling for a return to that $100 per barrel level. Is that a thing of the past now? Is anyone calling for a move of that size at this point?
I think there are the voices out there who say that there could be a really violent snapback in the other direction, and that the oil market is a lot tighter than prices suggest. But I think the mainstream view right now, if you look at the balance of forecasts, is that we'd be very unlikely to get triple dollar three-figure crude this year. Never say never, but I think most people think it's unlikely.
Well, let me go more short-term than that. I just did a 2 standard deviation study, and the lift up in Brent crude now at 76. I got to get to 78, 79 before I can really start talking any excitement. What's the, the people that, I know you don't talk to strategists, but like somebody like Javier, he's talking to all these oil hitters. Do they have in their head a $4, $5, $6 move in Brent here is doable?
I think a lot is going to depend on the economic news from here on out, and I think a lot is going to depend on what we see in inventories. I think people are really looking to see big drawdowns in US inventories. We saw a big one last week. We want to see that sustained for people to think that the dynamics of the market is turning here, and that we're seeing a more balanced market where the ample supply that we've been talking about is more than balanced by demand. So I think those figures as we go through the summer months, when obviously demand peaks globally, are going to be crucial to getting the kind of bump that you're talking about, Tom.
On short notice, Will Kennedy at Queen Victoria Street. Will, thank you so much for joining us here. And again, American oil from 68.69 out to 71.36. Brent crude with a modest pop, 76.12. Cameron Dawson with us right now for a couple of minutes here on oil. Every part of my body says buy straw hats in winter, which is oil's out, except the big oil stocks really haven't come back. Where you sit in Newedge Wealth, what's the linkage here of Brent crude with, say, ExxonMobil? Can you make the linkage from a barrel of crude in Bramo's living room over to stocks?
Not necessarily, because you have seen this divergence of oil prices and oil stocks really at different points over the last few years. We like having some exposure to oil stocks simply because it adds that inflation hedge, because that's where that correlation will start to kick in, is that if you see a pop in oil prices and you see, that probably propels energy stocks higher, and that would hurt other parts of the market, we think, if you think that inflation will come back because of oil.
And we only have about a minute to the break, but you think about, just how dominant energy was over the past several years. I mean, it was the leader in markets. Has the steam finally run out of that trade, though?
I think partially, yes. I mean, we did have the big boost in oil stocks last year that really was because of the combination of a little higher pricing and a lot of cost cutting. But if you go back to that 2-year return, oil stocks are still up 55% over the last 2 years.
I saw that. That's the first chart I looked at this morning.
Yeah.
That leg up 24 months ago was something.
Incredible.
Cameron Dawson with us here. We'll continue through the hour. Coming up on bonds, without question, our interview of the day. He is with PIMCO. They made global headlines this weekend. Tony Crescenzi joins us on the 2s10 spread, an historic 110 basis points of inversion. This is Bloomberg.